Welcome back, friends and traders. We have been waiting for this segment all day long. Welcome to Mindset Matters with our good friend, Dr. V here. Dr. V, she's a clinical psychologist. She's a Topstep funded trader, a hypnotherapist, a veteran champion of the reversal challenge. What else? What else you want to tag onto the resume there, Dr. V? Good afternoon. How are you?
I think I would be good just for the reversal challenge champion, I think.
Reversal challenge champion? All right. We'll get some swag made up. I won the reversal challenge on TopstepTV. What a great prize. Should it be a trophy, a hat, a t-shirt? What should it be?
Yeah,
maybe all of the above. You got to be able to show that off somehow. It's a very challenging challenge. I've done it myself a few times. I won it once, and I've got absolutely humiliated about 4 times doing it also. It's not easy. It's a different way of trading. We can start with that. How did the reversal challenge make you feel when you were trading?
And first of all, I want to say hi to everyone. Thank you for being here. Hi, chat. How are you guys? So happy to see you. And also, this is your time. We spent 1 hour together, and this is your time to be comfortable, ask your questions, share your struggles. We're all human here, okay? Even though I have, some psychological background, okay? But I'm still a human being, and I'm also a trader, and I also struggle. So yeah, I am a professional, but I also get my hands dirty from time to time, okay? So it's your time to open up, and I'm very happy again to be here. So to answer your question, then the reversal challenge, well, the first time I didn't quite get the rules right. So it was going so fast. And usually my style of trading, I'm more like a trend line trader. I have some levels and I trade trend lines. So I got very shaken from that, very uncomfortable.
Mm-hmm.
And I thought, okay, next time, I'm going to be better. And sure enough, let's go, let's do this. So I kind of got some rules around. So I said, I'm going to try it today. And still, I was using my strategy, which is interesting, because you could take the challenge as just randomly clicking or feeling the price action, but I was still respecting my style. And I think that helped me to respect my style more the second time than the first time. I don't know about you.
Well, that's not everybody's trading style, being in the market all the time, just reversing positions. But I do find it to be a valuable exercise. It is a valuable exercise just to overcome some emotional states that you might not have experienced in the markets before, because they do happen and they do come upon you. And the way you react to them can affect your trading in a great way,
Yeah. And I don't know if you had the chance, the opportunity to trade the 15 contract of NQ.
But yep, I did that too. Makes your palms sweaty, right?
Wow. I was not looking at the P&L at that point. It was too much, so yeah, that's a fun.
You have to disconnect from the P&L playing that kind of game. But I do find it a valuable exercise. And I am glad I've done
it. Me too.
All right, Dr. V, we have had a question form marinating in the chat all week long, I should say, yesterday and today. And we've got some good questions from our traders, from our friends here in the chat. They have opened up as you requested, and we've got some really good questions to go on. If you're up for it, you want to get started? Should we dive right in?
Let's go. Have some fun.
All right. This first one, I think, is right in your wheelhouse. This question comes from Mohana. Mohana says, I tend to have destructive behavior when I'm close to a goal in trading or in life in general. What advice might you have for me to work on that? Getting close to a goal, and then it sounds like Mohana might have a problem with self-sabotage. Does that make sense? Getting close to a goal and then just blowing it all up before you cross the finish line. It seems to be a common theme.
Yeah. So we have to understand that when we grow up, we form slowly, and with experiences and with relationship, we form an idea of ourselves the others around us, and the world. Okay. And sometimes because of the relationship, the interaction that we had younger, we form ideas that are not helpful for us as adults. And because our brain is not fully developed at that stage, we don't have the capacity to say, is this really true? Like, am I really worthless? Or am I really not able to do that? Or is it really okay not to express my feelings on that topic, etc.? Okay. So when we see behaviors that are sabotaging our trading, we really have to come down to, okay, what kind of schema do I have entertained in my being for so long? What kind of core beliefs am I playing in my head automatically? And I work a lot with the cognitive behavioral therapy with traders, because the main idea of this kind of therapy is that we want, first of all, to highlight what are the automatic unconscious thought patterns that might be detrimental to our trading or life in general. Because as I always say, becoming a better trader is also becoming a better person. You need to work on your trading craft from the inside out. That's why it's also so difficult, because we came into this business for the money, and we never expected to have to like transform as a human being, because it's more than learning about technicals. It's learning about ourselves. So are we ready? Not always, to put on the work. And it's hard, and there's a lot of ups and downs. So to come back to Moana's questions, because I need to answer it, I think there's maybe a schema, okay, inside of you that some way you might believe, you have this belief about your capacity that either you're used not to get to your goal, not to get what you want, or maybe you feel that it's weird, doesn't belong to me. Like, am I allowed to be successful? Am I allowed to win? Am I worthy enough for this? So these are very, and I'm sure a lot of you will say, uh-oh, the shrink has arrived. But I know it's deep, and it's like, what the, like, how does it apply to me entering an NQ position? Well, it does apply a lot, because your thoughts are reflected by the market. So I would start with that, with Mohana, okay? I would start by, what kind of thoughts are in my brain about myself? Why every time there's a goal, and also when it's near, that's also another layer there, okay? When I can touch it every time I do something not to get it, because it's a habit I have. It's a habit. I'm comfortable in not reaching my goals. It's weird, and it can be totally unconscious, because the brain seeks comfort and habits and survival before anything else. The brain's not wired to be happy or successful. It's wired to keep us alive, and the brain craves habits, even the ones that are not good for us. And habits are not only behaviors, habits are also thoughts patterns. I am not good enough, like an example. So I would answer that.
Wow, that's pretty deep. I feel like I'm not smart enough to be having this conversation with you right now. But
I'm sorry. I don't want to be too deep, but you have to, I don't want to lie to you too. Like, at the same time, you will have to go deep, and some deeper than others. That's part of the deal, So I'm gonna sugarcoat this.
Can we talk about habits for a few minutes? Breaking those bad habits that we're talking about, those habits that have been instilled in us for years. how do we get beyond those? What's a best practice for sort of detaching yourself from those bad habits and moving forward in a more positive way?
So of course here it's very broad because it's habits in general. So when I would work with clients, we go very to the core of it, like what kind of habits. But the first function of a habit is to answer a need. Okay, it's something that we repeat a lot that becomes internalized, like brushing our teeth, or like there's so many habits, the way we drive the car, the way we wake up, the coffee, the way we make coffee, etc. There's many habits. Okay, it's just something that we do repeatedly, but also the thoughts, like I said. Okay, so when you want to get out of something, first of all, you need to understand and investigate, why is this habit bad for me? And when I work on habits with people, I ask them, what is let's say that you want to quit smoking. What is at the current moment the advantage, like the pros of smoking? And then what is the cons? What are the cons of smoking? And then the opposite, what are the pros of quitting smoking? And what are the cons of quitting smoking? And we need to mirror the habits, the pros and cons on every specific habit, and then mirror them with the values that the person entertained about herself. What kind of life do I want for myself? What are my core values? Let's say for trading, what kind of trader do I want to become? Okay, and then when you answer that question, okay, I want to become a disciplined trader. How can I behave on a daily basis, on a trade by trade basis, to reach that, to meet my need of being, or my value? Okay, a value is very powerful. To meet my value of becoming a disciplined trader. Okay, so what is important to you? And then you need, like, the wonderful book Atomic Habits. I highly recommend to work on your habits. You need to go to the smaller form of a new habit that you want to form. Saying I want to have healthier trading habits, or I want to be more disciplined as a trader, is not enough. Like atomically, like on the single most tiny particle, what does it look like? First of all, maybe I should use alerts on my chart. That way, I don't have to look at my computer if I don't have to look at it. For me, that was a great example. Okay, I was working on the impulsive part of trading, so taking early entries. So alerts are great. Then I added trend lines to confirm an entry, because again, I wanted to be the first. But in trading, it's not about being the first, it's about being on time. Okay? So really going down to what kind of person you want to become. So it has to become a part of your identity, because true change comes with identity shifts. If you want to eat healthier, but it's not that important for you, it's more because you feel some social pressure, it might not work, because deep down, it's not a core value that you have for yourself. So there's a lot of work. I know we talk about journaling our trades, and it's very important, but also journaling our behaviors, journaling our brains on a daily basis, every weekend reflecting. Am I following the path that I want to follow? And another example from the Atomic Habits book, I think, where he says that, let's say that there's an alien watching you on a day-to-day basis, and you said to the alien, I want to become a disciplined trader, and the alien watches you every day, do you show behaviors and thoughts that align with that? If somebody is watching you and you said that, okay, but now they're watching you, is it really what you're expressing? So
are you saying almost like you're showing people what you think, or showing people what you want them to see, not what your actual value can be, though? Am I kind of catching this right? It almost reminds me of I really like what you said there. It kind of reminds me of the top-down approach in trading also. You start with the higher time frame, work your way down to the lower time frame. Sort of the more micromanaging tasks build up into a more they progressively layer until you get to that position that you want to be in. But I also understand, these things take time. Quitting something cold turkey, there's a high relapse rate, I guess you could say. And some people can do it, but for most people, it's not that simple, and it will take time to develop and evolve. Am I sort of catching on the right messaging here? Does that sound right?
Yeah, I like it. It's also, guys, I repeat that a lot, okay? But remove that pressure from your shoulder, okay? You don't have to know everything about the markets, okay? You don't have to be always on top of your game. You don't have to always have the perfect entries. You don't have to swing for like home runs on every trade. Okay, just relax, because wanting to go too fast, being too impatient, or beating yourself up will only make the journey longer and painful. Start small. One key secret sauce to trading, to become successful in trading, is drums rolling. Time. Like time passing, like seeing charts a lot, like repeating the same process every day, like being patient. Okay? And when you're working on habits, start small. Become aware also, sometimes people will use trading to fill a void. Again, this might be unconscious, but we're kind of expecting the markets to make us feel better. Maybe we move to a different city, we have no friends, or the social life is quite dull. The spouse is working a lot, we're stuck at home with the baby. I mean, whatever it is, if you find yourself lacking something in your personal life, sometimes what it will do is that you will try to get something from the market. Money, being right, because money is comforting. So when you're trading, we really have to, again, take ourselves out of it as much as possible, because we are dangerous in the market. Okay? We are very dangerous as humans. Yeah.
Thank you so much. Well, I think we covered, that was still our first question from Mahana. We covered quite a broad range there, from habits, destructive behavior, to overcoming those types of obstacles. Let's move on to another one of the deadly sins. Let's talk about greed for a minute. This question comes from Zen. Zen says, flat out, how do I stop being greedy? I have some great morning sessions trading, sometimes 3-4 trades in a row, or 3-4 figures, I should say. And with leverage, that is really a lot. Yet I find myself giving it back most of the time. I can't leave my computer. I do have Zen does have a remote job, so he's sitting in front of his computer and he can't leave. So he's focused on the markets quite a bit. He's locking out too early sometimes. He'll skip setups from time to time. but for the most part, can't get away from the markets due to greed. Just can't stay away, making money, giving it all back, just because they can't lock it in and walk away with it. What's your take on this question from Zen? Yeah.
Again, so far, I just want to say thank you to people who submitted questions. It's not easy, I mean, opening up like that. So I really appreciate, and also just know that everybody's learning from your questions, and I'm also learning from you guys. I love doing this. Okay, this is my true passion is psychology. I want to help people feel better about themselves. Okay, everything you need is already inside of you. I really love the humanistic approach. Everything you need is already there. Okay, but you have just like stuff on top of it. And I just want to help you dig and see it. Okay, so this is done. So thank you. So greed. I really like this question because I was a greedy bee myself. Okay, and I find myself being greedy still sometimes, right? Like the day I made a grant and I felt it was not enough. Okay, so very dangerous there. But again, just congratulations on being an amazing human being. You are perfectly normal. Your brain works perfectly. How cool is that? First of all, you're very normal. So,
That's good to know.
We want. Yeah, of course we want more. It is possible to have more. You know, in the markets, everything is possible. So, and it's exactly why. Okay, because the markets, people that actually like make a lot of money from it, they work on our humanity. They use it to their advantage. Okay, so we need to understand that, again, bringing your natural way of thinking, your natural way of being is dangerous. Because willpower will work some days, some trades, but willpower is a very easily tired muscle. You cannot rely on willpower for your trading. Oh, I'm not a disciplined trader. Oh, I should have took profit and beating yourself up. We are not disciplined, by the way. Okay, it's very tough to be disciplined when you have moving stuff. Well, this afternoon it's not moving, but usually it's moving. Okay, so you have stuff moving around. Okay, and it's very difficult to not do anything about it. Because again, we are doers. We need to do something about it. That's how we survive. And because it is possible to make a lot of money in the market, well, the shift from the process to the outcome comes very easily. We all know, it is process before profits. Everybody knows that. I think even if you're a trader since yesterday or today, you already heard that. Okay? But it's not enough to know it. It's not enough. So the main, how could I answer this very technically and then psychologically? Technically, for me, your system is not clear enough. Because we don't know what the market can do, we need to have a roadmap for ourselves. Meaning, if I take a trade, I already have my profit target. It's part of my trade. Okay? So there's one thing about, and again, we put a lot of emphasis on you need solid entry criteria. You know, you need a strategy. Totally. There is no trading psychology if you don't have a strategy, by the way. Okay. And I also find that a lot of traders, they struggle and they think they're very bad at it, but really they don't have a clear strategy. Okay. So very important. So then we focus on the entry, but the fun happens after. How the hell am I supposed to manage that? Oh, it's making money. Oh, no, it's not anymore. Oh, it's making money. Oh, it's not anymore. Oh, right?
Exactly, yeah. And I do
The
know
whole
from
thing.
experience that being able to manage those type of emotions just comes it comes from experience, you know. The more screen time you have, the longer that you've been doing this, maturity comes with experience here. And exactly like you're saying, good trade structure starts with knowing your risk before you get into a trade and accepting that risk before you get in. If you're risking $250 on a trade, you have to be fully prepared to lose that $250 before you get in the trade, and then let the trade play out. I know that's a difficult thing for new beginner traders to sort of wrap their brain around or to come to terms with. Nobody wants to jump into the markets and automatically just start losing right away. But it's part of the
So,
learning curve. We spoke about this in group coaching just a few minutes ago. But go continue, please.
no, I'm just, yeah. So the entry criteria, the strategy. Okay, perfect. You've got this. You know when to enter. You enter when you should. You execute well. Then management. And management is the most personal part of the trading strategy because nobody manages a trade the same way. Some go with R's. If I risk 1 R, I expect to make 2 R's or 3 R's. Some go to the next level. Some wait for a trend break to exit, etc. Okay, everybody has their own recipe. But again, that recipe needs to be known in a, let's say I bake a cake, okay? Again, my cake analogy, I'm baking a cake, I have this recipe. It is written on my recipe how long the cake has to bake. It's not random. It's not, oh, I will try 23 minutes today. No, it's there. It's 45 minutes. Okay? So your recipe has to be known from A to Z. How do I enter? Why do I enter? Where is my stop? Where is my profit target? And for greed, that is very, very important to know. Okay? Because you don't know what the market will give you. You have an idea based on technical analysis of where the price would probably bounce from a level. So it might be a good idea to take profit there. Or the way your system works, you take 2 R's on every trade. There you go, you set your bracket.
Mm-hmm.
And also, what is so awesome about the Topstep X platform that I really love is that you can act. It's awesome, right? You can set yourself, you can lock yourself out also when you win.
Mm-hmm.
I mean, that's awesome. Okay?
Yep.
And yeah,
That
and
option
also,
is yours, yeah.
Yeah. So the technical, I would say that maybe your system is not clear enough on where you should take profit. And always remember, guys, I posted that on my Instagram the other day, okay? Every time you are taking a trade, it is gonna cost you money. What I mean by that is that you will either pay comms, either have a losing position, and the comms you always pay them, but you know what I mean. So comms, losing trade, but also the other one of shit, my profit target was too early. Like I could have made so much more. The trader curse. Where should I fit my trade? I want to have a perfect trade every time. It has to be sexy for me to post it. You know, like all these thoughts. Trading is not always sexy, by the way. Sometimes it's like 1.7 hours and that's my trade. Guess what?
Yep.
I make money on it, so I don't care. Okay? I'm not saying like on a regular basis you should aim for 1-to-1s or less than 2-to-1s for the profits, but I'm just saying relax. Okay? And just have a cake recipe. And if you're unsure about one step of your recipe, I mean, make it so descriptive and clear and systematic. And then for the trade management part, what you just said, John, or JD, is that you need experience. Time is your best friend. And because you've seen so many of your trades with your system and strategy, now you can have data. You are a scientist. You're building a system and you're testing it in the markets live. This is empirical testing. So you're in your lab, you work late at night, you come up with the strategy, the rules. Now let's put it to the test. And then we repeat systematically the same thing until we have enough data. And when I say enough data, you should at least have samples of 20 trades doing the same exact thing. And then I took that from Mark Douglas, Trading in the Zone. Very nice book. Mm-hmm. And then the experience, the time, the screen time, it's going to give you conviction maybe to hold longer targets because you've seen it so many times and you know you can go, you can have like a bigger profit target because you like 80% of the time you have more than a 2-to-1. There you go, data. But it's so normal when you just go in the markets, you don't have a lot of experience. And I have 3 years of experience. And when I say 3 years, I'm very generous because I was just reckless for like 1 year. Okay, really scary. Okay. So when you want to build a good experience for yourself of doing the same exact thing, and then you see it, and you have conviction. It doesn't grow on trees. You don't wake up a morning and you're like, oh, I'm such a confident trader today. No, it's the leap of faith. In the beginning, you are testing the strategy. And it might not work. The strategy might need some tweakings around. Maybe your stop is too tight. Maybe your profit target is too far away. And especially during different market conditions. Today, you know, we have big news tomorrow. We maybe are not shooting for the moon. But again, experience. That's a nice ping pong match on Dow Jones right now.
Should we check in on the markets real quick?
Yeah, I can share my screen maybe.
Sure. I'm pulling up the Dow myself right now. Here we go. Yes, very sideways price action in the Dow. Look at that. If Dolby Time was here, he'd be tearing this market apart right now. Let me just draw this off for you. This is a 5-minute chart in the E-minute Dow. Look at that. Just perfect barcoding right there. That is a range, if you've ever seen a range.
So, welcome to the geometry class. This afternoon, we will learn about the rectangle. Can I share my screen just to show something real quick?
Absolutely. Feel free.
So I'm sharing it, I think.
There it is.
Okay, perfect. Okay. So that is an example of how I became less impulsive. We were talking about habits earlier. And for me, when the price reaches a level that I'm interested to play, I will need the level to show the right price action at it, but also I will need the direction to validate my play because I trade most exclusively reversals. I really need the leader, the price action, okay, to tell me I am aligning with your idea of reversing. So that kept me out of trouble so many times because I would see this. Okay, that was me. It kind of worked, but let's say it didn't. That was me before, okay? I would see this, and then, oh my God, it's a reversal. You know? Like, I have 2 one-minute candles that are bullish. Like, I'm in, you know? When it's not really not enough sometimes. You need more than that to take a trade. So for me, I had to come with a system that helped me being less impatient, less impulsive. And when I see this, okay, based on my system, if I take this trend break, and now I need to adjust it because we had some, yeah, like this. So that would be my trend line, okay? If I'm taking this trend break based on the idea that I want to long this support, now I need to take my trade here. But I have this resistance in my face. So I know that if I take this trade, I have to take profit here because we might not reach this level, especially today. But if I take this trade, it might be only 1.5 R, you know? So you see, it's like 1 to 1 or like 1.25 to 1. So also, it's not enough for me to say, hey, I have an entry criteria based on my system. Does it have enough room for me to make money? And sometimes I'm like, yeah, go for it. That's going to be my only trade of the day. And I mean, if I'm risking 150 on this trade, I mean, I could make like 150, 175. That's not bad, right?
Not bad at all.
And yeah, and what I find very interesting also with myself and traders I work with is that sometimes we're like, oh, just $100, you know? Yeah, but you made $100 in like 12 minutes. I think that's a pretty good hourly rate. Right? So why for trading?
I would say so.
Yeah. So for trading, we are so greedy. We want to make so much money. And then we go to our day job and we're like, you know, making maybe $100 per hour. And we're like happy with that. But making $100 in 12 minutes, oh no, that's not enough. That stinks. Like seriously? Yep. Like what is wrong? Okay. So to answer the greed question, I would really work with the technicals, the way to protect yourself. So lock yourself out, have a profit target, maybe have a profit target that's solely based on making twice what you risk, right? So you have your stop loss based on a technical analysis. You make 2 Rs on every trade and you're done. You have very specific rules for when you exit a trade because you know you have the beautiful self-awareness of knowing I am greedy. Okay, so you're aware of that. So how can you protect yourself from that? And then on the psychological layer that we never have to forget, you need to understand and dig into that. Why it is not enough. Why I'm chasing always for more. Again, am I trying to fill some void? Am I trying to prove something? Do I think I have more value if I make more money or if my target is far away? What is the need I'm trying to meet with that behavior? Why my brain thinks I need more systematically? Maybe because we didn't have a lot of money growing up and I want to show my parents that they did a great job and I want to take care of my parents and I want them to have a comfortable life and I'm going to make so much money so I can take care of my whole family. Or maybe I'm putting myself some pressure because I need to pay bills, or maybe because I lost too much money trading and how now it has to work on every trade. I need to make, like, what's going on? Because being greedy on its own has no meaning, you know, it's just a human response, a very natural one. But what are the markets trying to tell you?
Very insightful there. Yeah, great questions to ask yourself. What is the need for staying in the market when you've hit a certain target, or when you've hit a certain number, I should say. I'm definitely coming back. I've been taking notes this whole time too, Dr. V, and I'm going to come back and watch this again when we're done. I feel like there's a whole lot more I can be getting out of this personally, and I hope everybody else does the same. All right, we've got time for... Oh.
No, I was just saying, we are all the same. When we start trading, We all suck. All of us. Nobody gets trading fast. Okay? And especially if you have unresolved stuff going on, or personal stressful events in your life, or financial pressure, whatever it is. But please, guys, we are all the same, okay? So don't feel ashamed. You are a good human. You are good enough. You just need more technical. You just need to be aware of what is hurting you so you can protect yourself. And on the other step, try to understand what's going on there. Okay, give yourself some love. The markets, they want to love you. I know it's tough love most of the time. Okay, they give us money, they take it back. But what is the message there? Okay.
Try and suck a little less every day. There's the message. Well, this kind of leads us into our next question here, which kind of caught my eye. I know when you were on with Hogue last week, you guys talked a little about Tom Hugard's book, The Best Loser Wins. And I've read it a half a dozen times already this year. And this question kind of stuck out to me. So we've run through a couple of different topics here. We've talked about destructive behavior, habit forming, habit killing. We've talked through impulsiveness, greed. And now this question kind of brings up the topic of fear a little bit. I'm taking it as a question of fear based on what I've read in The Best Loser Wins. But this question comes from Farazal. Farazal says, how do I push myself to stay into a trade when I have great entry, but I always find myself getting out too early, locking in profits, even though my strategy is telling me to stay in a trade, I'm getting out too soon. Does this sound like what Hugard talks about, fear? The fear of being in profit and locking it in before you lose it, or holding on to a trade for too long because you're afraid to get out and actually realize those profits? Is this something that you sort of subscribe to? Is this this concept of getting out of trades too soon out of fear of losing money? It's a topic we've talked. Oh, please go ahead. I was just going to say it's something we've talked about in passing here, but we've never really gone into too much depth about it. Just curious how you feel about that. Trading around fear of losing. Yeah.
So losing is the first thing you need to get happy to do, trading. Not necessarily happy, but you need to get used to it. Losing is not necessarily losing. The way I see it is I chose to invest that kind of money into a trade because I'm planning on making more money with the trade. Like if I have a shoe store, I'm going to invest money to buy shoes and then sell them, or to pay someone to make shoes, whatever it is. I'm investing money with the objective of making more. So in trading, it's really impossible to make more money if you don't invest the money. Again, fear, like habits, like so many of these topics are very large topics. I mean, we could have like a couple of sessions just on fear, right? But the idea is that if you are afraid of losing money, don't become a trader. But again, if you're just starting, it's totally normal to be afraid. Again, I would be worried if you would not be afraid to lose money. Again, you're a great human, okay? The brain is firing. The brain is telling you, hold on, you might lose money. You just made a couple of bucks. Take the money, take the money, take the money. Or just not taking the stop, because until the stop is hit, it's paper money, right? It's not real. The loss is not real. So we ignore the stop loss. Okay? So the easiest way to make money in the markets, it's not to be scared of them. And I'm citing Jesse Livermore here. I love Jesse Livermore. Okay? He has so much amazing insights. And also, the easiest money to make money in the markets is to sit on your hands. Again, when I say sit on your hands, what I really mean is that you let your trading system take on the wheel. You need your humanness to build your trading system. You need your brain to chart. You need your brain to spot an entry. You need yourself. You're very smart. You know a lot. You're amazing. When you click and you're in the trade, there is nothing you can do about it. Because whatever the trade brings, it is data for your trading career. Because if on a frequent basis, every time you hit that winning trade, it turns around right before your profit target, there's something you need to work on. Okay? So we, again, comes back to patience. We want it to work already. It has to work. And we're so focused on every single trade that we make. Like the focus is like tunnel vision. This trade has to work. It's not true. You just need an edge. You need an edge that's going to work more than when it's not. Whatever your edge is. Okay, some people have big trades but have a lot of losers. Some people have a very high win rate with smaller winners. Again, this is a very personal part of trading because it is your signature, your trade management. So if you find yourself stressing out about a trade and wanting to take the money, you know it's an emotional trade. And it's not the kind of trade that will make you survive in the long run. You always have to think, this is a very long-term journey. My job is to repeat the same process and after some time assess, is this working or not? After some time and some trades. But if you keep placing your value as a trader on every single day, that's not gonna work. You're gonna burn yourself out. It's like the coin flip analogy. If heads has, let's say, 55% of landing and tail 45%, what side should you aim for every time? Heads, right? Same for your system. You do the same thing. It's not because it lands on tails that you're going to change your mind from now on and go and expect a tail to make money. You know that heads lands 55% of the time. So you just need a lot of repetitions and you'll make money like casino does. You know, they have an edge. The way they deal the cards, they start. Or you start. I'm not a big casino expert, but they have an edge on you. So yes, they're gonna lose money. Clients will make money, but over time, they will make money. And that is, again, if you can remember something from this session, please do me a favor. Time, patient, softness. Be soft with yourself. Be gentle. Be compassionate. You are so courageous. You are learning a new skill, a new business. It's hard. You know, give yourself some time and some experience and just let the thing work. So you cannot take the money earlier because you have a profit target. Your system works in a way that if you click the mouse and take the profit too soon, you cannot use the data anymore. So it's a wasted trade. And then it takes you longer to achieve the stage where you're not fully, it's not the right word, but when you're comfortable in your strategy. When you build conviction comes from doing the same thing all over again every day, every single trade, and then seeing it, what it does, what it does, what it does. It's like a relationship. Oh, now I'm starting to trust that kind of entry. Usually that's a great entry. Or that kind of profit target, it's great. Okay, build psychological capital, build financial capital, and one day you will have enough buffer that you will be able to let your trade runs. Okay, and also with Tom Hogarth, I think we have to be careful with the technical or strategy part of the book, because I've heard many traders struggling with the fact that he talks about a lot of about adding to your position when you should take profit. And
yes,
I think
certainly does.
He was in a different kind of market condition when he wrote the book, I think. And also he is a very good trader. He has experience. He has conviction in the way he trades. Okay. He has a different trade management. If you are a developing trader, please go for base hits. They are good enough. You need these to build your account buffer, but also your trust in yourself and your strategy. One day you will be able to trade like him. Okay. And again, you need you need good trending market conditions. Okay. One day you will be able to achieve anything you want, but build that foundation first. And that takes time. Okay. That takes the most time of testing something and being a scientist. But it's so worth it, because as soon as you have this solid ground, a solid foundation, you just put floors on top of it. Unshakable.
Yep. That's how you build a house. Answer. We said that. Yeah. We talked about that during group coaching. You build a house brick by brick. That's what MP would say. Yeah. And yeah, it's the same with trading. One step at a time, brick by brick. All right. Dr. V, that hour went by very fast. That's all the time we have. We got through quite a bit, quite a few topics. I want to thank you for your time. Always a pleasure having you on here. Appreciate your insights, your trading knowledge, your wisdom. Again, for anybody just joining us, Dr. V, she's a clinical psychologist, a Topstep funded trader, licensed hypnotherapist, and we've been here talking about trader mindset for the last hour.
Greetings traders, this is Coach Robert with another episode of Topstep X in 5 minutes or less. In this video, we will review how to choose and toggle between different instruments. I currently have an order panel, a DOM, and a chart set up, and I have them all linked to the yellow instrument. So when I change one, they will all follow the same instrument. There are multiple ways. Very easy way is to click in the symbol search area and we can start to type. Let's say ES. I'll type ES and it will come up with anything containing ES. To see a list of all the instruments, I will just use a /. These are all the instruments that are currently available at this time in Topstep X. Keep checking back because we constantly add more instruments. So let's choose NQ, for example. NQ is on the chart. Since it's linked to yellow, NQ is on the DOM, NQ is on the order. We can choose a drop down here, and let's choose MYM, the microdowel. Since they are all linked, they all changed to MYM. We can also just start to type in here as well. MES. MES like that, and it will populate. I find it very easy to just make sure that I'm clicked in the chart. So there, I have the chart selected. And if I just start to type the instrument, for example, gold, G, it's coming up with everything that has a G in it, C. Or I can type in GOLD that you can see, and then click. That's a very easy way to change quickly. For example, ES, click. They all line up. NQ, click. CL, click. Very easy. Again, you can change it in the order panel, the DOM, the symbol search, or just by having the chart selected and type in the instrument you wish to see. Just be sure that they are all linked to the same color so they all change the same. This concludes the video on how to choose instruments.
Welcome, traders. It is time for Mindset Matters with Robin Dayne. Robin, it's a pleasure always to have you with us. And how are you today? How is trading going for you today?
Not today. I had too much to do, but it's a good day. I've been watching it in the background, and
Of course, we're
crazy
always
markets.
watching, aren't we?
Yep.
Well, if you don't know Robin, this is Robin Dayne. She's come all the way from Broadway to Wall Street to Topstep. She has worked with thousands of very big traders, some of the best in the world. She trained for 8 years in mastering her neuro-linguistic skills with Anthony Robbins. She again has worked with some of the biggest traders in the world, and we're always very blessed to have her with us. A big round of applause, everybody. So the way this is going to work, Robin has a couple of subjects that she wants to talk about for about the first half of this session. And the second half of the session, we're going to be taking questions from the chat, from you. You may want to wait a little bit before you start popping in those questions, because the things that Robin is going to be talking about are hopefully going to stir up a whole lot of questions for everybody. And I know she really enjoys the speed and tempo of answering those questions. So we're going to do the best we can to catch as many as we can. But right now, I am going to let Robin take off.
Okay.
Go for it, Robin.
Thank you so much for hosting all the time. I really appreciate it. And I had to say one thing. I've never seen so many wonderful women trading. When I started in the business in the 80s, I had to date myself, but in the 80s in the trading room, it was 100 guys and me. And 3 years I was there, I only saw one woman. And I used to watch Maria Bartiromo on the trading floor get bumped around and hit by everybody on the trading floor. She was the only one there. And it's so wonderful to see so many women. And women make better traders than men do, psychology-wise. So it's a great thing to see. And you've got some wonderful women in the room. And today with Anne-Marie and Deanna, they gave some great comments. And I just want to say, it feels good to have you guys around. Okay, so the topics that Hogue recommended, and one that I want to put in there is how professionals can consciously recode the way they learn and operate, and how to turn unconscious habits into intentional patterns that serve performance rather than sabotage it. So, and then my third one, I'm going to be talking about stops, not trading the stops, but psychologically managing it, because in the coaching sessions I've done recently, they all pop back to managing the stops. And there's different things I want to talk about in relation to stops. Okay, so how professionals can consciously recode the way they learn and operate. So depending on how fast your mind works will depend on how fast you learn things. And when you can learn by reading it, saying it, writing it down, and rereading it goes into your mind faster than if you read it once and you think you have it. You don't. So if you're looking at the trading screen and you're seeing something that you never saw before, like we're at all-time highs, that's a new situation. I haven't, we don't go through that often. Summertime is another group of things before any numbers get released. All those little tiny things you should be capturing in your notebook every day. And I've said this many times, keep a notebook and write 3 new things you learned every day, one-liners, and then reread them in the morning. So when you write them, look at them, reread them, and in the morning, then they start to sink in. You'll eventually get down the page and you'll eventually say, oh, I got that now. But there are instances that don't pop up that often. So that's what's important. The more you can write, reread, look, even say it, because you're using all your senses, your eyes, it's going in, that goes through one neuroconnection through your ears if you're saying it. And if you're saying it, you're feeling it in your mouth. So it's sensing. So you're using they're called submodalities. And so you're using all of them, and that makes the neuroconnection stronger. The more layers you have, the stronger it gets. So that speeds your learning curve. When you write down those distinctions during the day of what you're seeing, that's helping you learn. I also suggest that in the beginning of the week, you pick one area that you focus on and write the distinctions for those. And I classify distinctions are nice things to know that help you trade. I classify rules that are things that protect your cash. So a distinction would be when Trump announces something, I find that the market has a shift. And we'll talk about that in the stop area. But he's doing so many things with tariffs right now that you've got to be very, very careful. Very, very careful that he doesn't announce something and then it throws the market. I'm just putting my phones away. And he can affect the market. The other day, it was crazy. And then, of course, with Powell, Powell not giving in to him, there's a distinction with learning, because we don't want to preconceive what the market's doing. It is what it is. So your indicators have to tell you what's happening in the moment. You've got to read the market. So when Powell came on, we had a huge move during that. And in the old days, I've noticed we have a divergence between how the Fed used to react to certain indicators in the economy and how the president functioned. And in the old days, they were a little bit more in sync. Now we have the Fed reacting as it did in the old days, but we have a new president that's running the office completely differently from the way the old days are. So they're in divergence. And Powell's not giving in. It's clear that he's not giving in. So he's going to run it the way he wants it. So when Trump has these announcements of these tariffs, you're going to get these moves. So write down what happens when news comes out and what your rule is maybe for protecting your cash during those times. Write down the distinctions that you've learned when news comes out or news is about to come out, numbers, CPI, unemployment, anything that has numbers. Write those distinctions down, because they don't happen often, and that will help you learn. And you can have those sections in your book. But every day, write 3 new distinctions and mark any rules that you need to have. So that will speed up your learning and have you lock it in to your memory faster than just reading it once and think you got it. So when you go through these recordings, if you go through the recordings that I've done, it takes you 7 times before you will get everything that's in the recording. You'll only comprehend 40% of what we're talking about today. And your 40% is going to be different than Anne Marie's 40%, Hoag's 40%. Everybody's 40% is different because your mind accepts only what you need in the moment. So whatever you need, you're going to hear. So when you go back in time and review the recordings, you'll hear it and you'll go, oh, I don't even remember her saying that, because you didn't need it at that time. So reviewing things over and over is another way to increase the learning, because it takes you multiple times before it gets in there. So that's another way to lock it in. So
probably why whenever I read a trading book, I have to read it several times. And I've always suggested to people to do that. There's so much information in there. You're not going to catch it all the first time. You got to read it a few times. Great stuff, Robin. Go ahead. I apologize for interrupting.
Think about, no, that's okay. Please interject. Think about how many screens you're looking at, how it reacts, how the screens react in different situations. I mean, we have so many different combinations that we have during the day, and we have to take all that information. We have to sort it out mentally, and we got to figure out how to get in and how to get out. So we have a mental, I'm going to call it a word salad for lack of a better word. We got a word salad going out around, and we've got to sort it out and make a decision. So making a decision comes very quickly. If it comes too quickly, then your emotions are taken over. And so we don't want to have FOMO and have you rushing into a trade because you're pulled into the trade emotionally. We want you to think, measure what you're doing, enter the trade where you're supposed to, and then go from there. So another way, and I'll talk a little bit more about that in stops. Okay, so this next topic was how to turn unconscious habits into intentional patterns that serve performance and rather than sabotaging it. So if you're rushing and jumping into one trade after another, you're emotionally getting, I call it hooked, into the market, and you're being seduced, and it's the addictive side of trading, being pulled in there. And you really want to avoid that. That's unintentional, an unconscious habit. If you have that, you could be dealing with a block. And I know I talk about this all the time, but blocks are one of the major things that traders deal with. And if you're emotionally hooked and you're being pulled in, I'm afraid I'm going to miss that trade. I'm afraid I'm not going to make my money back. I'm afraid that I'm entering at the wrong time. So any of the blocks stem from an emotional fear. Any emotion whatsoever means you have an emotional block. And so the solution to that is, of course, you can get coaching and get the block removed, or you can do what I call a solution process. So this is getting to how we create intentional patterns. You take your challenge that you're having, you figure out what the solution is, and then you take action. And so I've talked about that many times: problem, solution, and action. People get stuck at solution. They know the problem, they know the solution, but they don't take action to fix it. And you have to take the I'll go until attitude to find the solution. If the first solution doesn't work, you got to find another one and try it. If that solution doesn't work, you go to the third one. You keep going till you find it. And again, I've done this in the past. Always stop after a losing trade, go to problem, solution, action to fix that losing trade. Do not take a second trade, because that's going to install the unwanted habit. That's going to, every time, I call it 3 strikes, you're out. If you're getting hooked in and you're taking 3 trades and all of them are losers and you haven't changed anything, then you're going to lose again and it'll continue. That's an unwanted emotional reaction. You don't have a baseball player go to the plate, miss the ball altogether, take a second swing, miss it again, and during practice the coach comes over, come on, you've got to pick up your arm, you've got to do something different. I was engaged to a pitcher, so I know all this baseball stuff. So so and have it change. If he doesn't change it, he's actually locked into his body the pattern that doesn't work. So you do repetition over and over on trading in a winning trade to lock in a good pattern. You can look at the winners that you have and look at what you did during the winning trades and write down as much detail as you can there. Then that will increase your learning and it will allow you to repeat the good pattern. Maybe in examining a winning trade, you'll realize what you were missing on the losing trade. And so that will allow you to make the modification. Always take the action. That's the main thing. So I'm looking at it. I'm getting hooked into the trade, and I went through the hook once before. But let's say I'm exiting too quickly. This is a very common problem. I get into a trade, it starts working in my direction, and all of a sudden there's a pullback, and I get scared. I'm going to lose the money I've got. I've moved my stop. This is going to lead me into the stop area. I move my stop and it goes up a little bit, but it comes down, it hits my stop, and it turns around and it goes right where I thought it was going to go. How many people have had that happen to them over and over and over? If I had $1 for every time I heard that, I'd be a millionaire, because it's
Not
one of
me.
the most common things. And not me either. So
I'm just kidding.
the key thing is the reaction and noticing what you're doing. So in that scenario, I'd be looking at a couple things. What's the problem? I keep getting stopped out, and I get into the trade, and when I enter is good, but I'm moving my stop too fast, too quickly, and I'm not letting it work enough, and then it takes me out and it goes to where I want to go. So you want to examine in that area, what's the distance of your stop, and can you move your stop with some confidence and certainty so it doesn't take you out? Look at how much it pulled back. So this is the distinction. When it goes up in your direction and it has the pullback and it wiggles and waggles there for a little while and it comes down, how much did it come down to hit your stop? What was the distance? And then make your distance a little bit larger so you have the room for it to work, because trades don't go straight up. They just don't. They can go straight down, but they still will wiggle and waggle. Why? Because if you're going down and all the sellers come in there, you're going to have buyers come in. They're going to close and take their profits along the way, and you'll get that wiggle back up. So I call when they have these wiggles. Sometimes it's a breath. So if it goes up, 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 we have buyers coming in, and then we have a little dip because they closed their trades and locked in profits, a little breath, and then it goes up, 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 and that's what it's been doing, hitting new highs. Up, 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 breathe, up, 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 breathe, and then we get those people that insist on, oh no, it can't go any higher.
There it is.
But it does.
Right.
But it does. Can't go any higher. And I can't tell you, I bet you a whole bunch of you say, can't go any higher than this. Can't go any higher than this. But it does. We're in an area that doesn't happen often, or didn't happen in the past, certainly not during Biden, and going up, up, up through new highs. And with Trump doing all the things that he's doing in the business and the economy and tariffs, we're having numbers. Microsoft hit a huge number. He had a huge increase today. I mean, just enormous. And we never had moves like this before, like this massive moves. with AI coming into the business and all these companies getting into AI, it's going to fuel their growth and their numbers, and it's going to fuel what's happening in the markets. So you've got to be ready. So notice on the stop how much it comes back, give yourself room, and then try it. If that number doesn't work, look at it again, see how much you have to pull it back, maybe some couple more ticks, do that. Problem, solution, and action. Take an action. If it doesn't work, find a new one. And that's going to increase your learning curve and start increasing the pattern of performance instead of losing. Okay, sabotaging. That's a whole separate subject than just intentional patterns.
Robin,
Sabotaging.
can I bounce a couple of things off of you though about
Sure.
what you just what you just went through? When you're talking about unintentional trades, right? Jumping into trades out of emotion, those kinds of things. Would you also use the word impulse for those unintentional trades? I mean, the impulse is like, okay, I'm going to miss this trade. It's an emotional thing. You're jumping in early or whatever it is. Could you use impulse as a word for that as well? And that's a word we use a lot.
There's a whole bunch of words. Impulse, seduced into the trade. It's the addictive side or the addictive behavior in the trading business. And we all get it. We all get tempted. We see something or somebody says something in the room and we're not there and we didn't know what was going on, but somebody says, oh, something is running or something is moving or it's finally taking off. Something is said in the room. So you jump in. So it's an impulse, and the plan that you normally had has you be pulled in from an impulse. It could be something you heard, something you saw. It could be just that you're doing it over and over, because you can lock in an addictive pattern and get pulled in. The fear of missing out is just big. I mean, everybody gets FOMO. It's a terrible disease, but it gets us pulled in and happens over and over. So there are multiple words. Anything that is making you do something you don't want to do is the challenge. That's where you have to stop. Or again, you'll repeat it. And I've mentioned this before. I'm sorry for being redundant, but these things are important, and they have meaning in the moment. You repeat patterns. Your body loves patterns. It lives on patterns. It's secure with patterns. It's more confident with patterns. But in the trading environment, locking in a bad pattern is dangerous and it costs you money. So our body is doing one thing that it does normally, but in the trading environment, it can work against us. It can work in our favor if we're locking in winning patterns, but it can work in a negative way and do the sabotage if we're doing it in the negative way and repeating the losing pattern. So that's where you have to be careful. You have to control that. And so the control of that comes from doing the opposite of what you were doing and finding an action. And if that doesn't work, finding a new one, finding a new one, finding a new one. And I've had traders that were doing coaching, and they, again, would get to the problem solution, could define that perfectly, and then they never went through to the action. And that's probably the biggest thing, even in our lives. So we have a challenge in our life. We know what we're supposed to do, but we don't do it. And so we get stuck in the solution. We get stuck in knowing how could I not do this? How could I not make that change? I know this is hurting me. Why can't I do it differently? Why am I constantly doing the wrong thing? And that goes through your head. But that story in your head is not working for you. So I always say, do the opposite. And what could you do differently? Is thinking that way pulling you in a forward direction, or is thinking that way have you stuck, or is it going in the backwards direction? So I'm going to leap into the stop area because I found a couple things during the week that a couple of my traders were doing, and it's related to stops. For all of you that are new, and I define new as under 10 years. If you're under 10 years trading, you're new. You're new. If you're under 5 years, you're really new. New is new. There's a boatload of information that you have to find out. And everything in trading changes. Everything from the 80s when I was trading doesn't even exist anymore. So you have to constantly learn. That's why I love the question, how can you recode and increase your learning? Because you have to learn every day. I'm learning every day. If you stop learning and think you've got it, you don't have it.
Then you're in trouble. Robin, if I can
trouble.
interrupt you for a second.
Yep.
We are having some problems with the platform, folks. We are aware of it.
Okay.
The engineering team is working on it, and as always, Topstep will make it right for everybody. We are well aware of it. Just relax. Listen to Robin. She's talking about some really important things here, and again, we're aware of it. We're working on it, and we will make it right for everybody. So, all right, let's go back to Robin. You were just about to go into
I'm going to just talk
sabotage.
a teeny bit about the sabotage and the stops, because so if you're new to the game, the thing I'm saying to new people, and if you're trading 10 years, I'm sure you're doing this, you must have a hard stop every time you take a trade. Every time you take a trade. There's not one high-end trader, multi-million-dollar a year trader that ever traded without a hard stop. You have to get into the pattern of using it, because as you go up the scale and make more money, you have more at risk if something goes against you or Trump has an announcement and the market drops. You can't have 50 contracts on and have it turn on you. You have to have a hard stop to protect your capital. So a hard stop should always be in there. I don't know what platforms you're using, but I suggest exploring a bracket trade. And a bracket trade puts 3 orders in at the same time. It puts your entry price, it puts your profit target price, and it puts your stop, hard stop in. All 3 at the same time, 1 click. Speed in trading futures is critical. So you want that to happen. Once they're in, you have flexibility to move them, but use bracket trades. So if you're new, find out how to do that and use bracket trades to have a hard stop. Always trade with a stop. Then the next thing, for more experienced traders, what I'm finding is they get comfortable with the stop and they use the stop as their safety net, and they wait for it to hit the stop if the trade's not working, to maybe have it turn around and prove they're right in the trade. So you shouldn't use the stop to prove you're right. If the trade is not working and you know it's not working, and you're looking at your indicators from where your entry is, and it's just not going in the direction that you want, and it's heading towards your stop, get out of there. Get out. What's the worst thing that happens? You have to get in again, and you get in at a better price? That's the worst thing that happens. But traders, I'm finding with experience, are holding on to their strategy because they're in the pattern that the strategy always works. And when it doesn't work, they try to prove they're right, and they wait for it to hit the stop. And they're giving back more money than they need to when they know the trade wasn't working earlier. So for experienced traders, you keep adjusting your trade in the moment. And I have my favorite question: what's really happening in the moment that has you reevaluating the whole market and your position based on what you want to do in your plan? And if it's working, you stay in there. If you have things that confirm it's going to have a little pullback and maybe it's a little breath, then stay with it. But don't stay with it just to prove you're right. And so a lot of traders do that to prove that they're right. And that's a condition that happens a lot. So that's on stop. So for new people, always have a hard stop. For experienced people, don't rely on that stop to be the thing that's going to prove your trade right or wrong. Manage the trade during the time and the exit if it's not working. Okay, so now we're right at the half hour. So you can start putting your questions in there. I can talk a little bit more about moving forward when you do the problem, solution, and action. Make sure it's pulling you in a forward direction. So if you're addressing, how can I not lose at the next trade? How can I not lose at the next trade? That's focusing backwards. Focus forward. How can I make money at this trade? What could I see differently that would allow me to stay in the trade? So many of you have written in your questionnaires, I get into a trade, it's working, and I get out too soon. So what could you see that would allow you to stay with the trade, have more confidence in the trade, make more money at the trade? Maybe you scale in. Maybe you have added 1, 2 in there, and you start with 1. I like to do 1 as a test, and then I add when it's going in my direction. I like to see what the market's doing, and then if it's working the way I want, I start adding, and then as I'm getting out, I start scaling out. And I do it that way. Everybody does it differently. You have to do what works for you. So you can scale in or scale out, but look at different things that would tell you where to exit the trade. Maybe you see somebody in the room exiting at a higher place than you exited, and they saw something. So ask in the room, what did they see specifically that allowed them to stay with the trade? Did they see volume? Were they watching in the dome? Were they seeing time and sales? Were they seeing a moving average? What did they see? A level. What did they see in that moment that allowed them to stay in that trade? And then as you're staying in, that's when you can move your stops up and then wait and move your stop up and wait and take as much profit off the table as you can. Moving and thinking forward, not how can I move my stop and keep my money, or how can I not lose at this next trade? So when you're focusing on how can I not lose at the next trade, that's don't think of the color blue, don't think of the color blue. You're focusing on losing. How can I win at the next trade? What could I do better at the next trade? It's not just positive thinking. It's the words that you're conditioning your brain to think as you're in the trade. The words you're conditioning your brain. Watch out for how you're doing your self-talk during the trade. That's the most important part, because nobody's there to check you. I'm not there to tell you you're saying the wrong words. And so you have to catch them yourself. When I do coaching, people will say words that they don't even remember they're saying because it's so locked into their subconscious memory that they're just regurgitating it. So be careful of how you talk during the day. Forward-thinking questions, positive words going forward. How can you win? How can you make a trade better? What could you see differently? What are the distinctions? What are the things that help you trade? Anything like that in a forward direction. Is it pulling you a forward direction? Okay, let's go to I think we're calling this rapid fire now, I think.
Yeah. Well,
okay.
I like that. We're just going to take a quick look through the markets here, just briefly. The equities swept yesterday's lows and are seeing some pretty significant buying coming in off of that. The S&P is currently trading 63.97 half. NASDAQ currently trading 23,438. Crude oil relatively range bound, still holding around 69.43. And gold with another bounce off of that weekly kickoff low, currently trading 33.4730, but not really seeing very much momentum in either direction at this time. For all intents and purposes, gold is closed for the regular trading hour session for the day. The tilt, we've got 70% long in the ES, 75% long in the NASDAQ. A lot of buyers coming in off of that low. Crude oil, 59% to the long side, and gold pretty much just mixed, 54% to the short side. All right. So
okay, leave that up for a second. Leave that up for
Yeah.
a second, because this is showing a perfect example on the NASDAQ and the ES, the breath. It came down, 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 down on the right side, and then there's a breath.
Mhm.
Down, 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 and now it's breathing. So what you don't
Yeah,
know
so
in this moment, is it going to rotate and go back up, or is this just a breath? So you have
just
to
a pullback.
be ready for either one. It could do either
Mhm.
one. I don't know what it's going to do. I have other things that help me decide what it's going to do. It's hitting major levels at the bottom and support levels down there. But that's an example of a breath. On the way up, going up where the circle is on the left side, the green, when it went up, 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 that big long move up, it had a teeny bit of a red there where it pulled
Mhm.
back. It went up a little bit
Mhm.
more, a couple candles, and then it had a little red candle again. Up, up, up,
Mhm.
up, up, and then the sellers come in to lock in their profit. Up, 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 and then the sellers come in. So you have a breath in either direction, but it will go. And this is a great place to put a Fibonacci. When you have a big long area like that, running a fib on that whole section will give you an idea of what they're doing. All the big guys have a tendency to use Fibonacci's. All the
Okay.
institutions, the hedge funds, they love fibs. So that's another thing that could help you with where is it going back up when it reverses, and we don't know what's going to happen here. We have an hour and a half left in the trading day. So we have
Right.
time yet, and it could be a total reversal, or it could be a breath and head down again, because we've had a lot of up days. So it's getting really primed for some down moves here. So we have to be ready.
All
And
right.
so, okay, questions?
Thanks, Robin. Okay. Now, you mentioned you should have a hard stop, right?
Yes.
Jim Dalton agrees. He says you should have a stop in for sure, but you should try and never hit it. What you're talking about would be more of a catastrophic stop, or just something to make sure that if something goofy happens, you're protecting yourself. But your stop that you're talking about isn't necessarily at the point of invalidation of the trade. You're placing a stop just to make sure there's something in, but you're managing the
Safety.
trade. Yeah, you're managing the trade cognitively to say, okay, if it gets to this level, that's where I'm going to get out. I'm not going to wait for the stop. That's
Exactly.
the point of invalidation. Because there was one question here, and it's from our good friend Mohammed. He's like, how can I exit before the stop and the worst thing can happen? What we have something here we call lennying a trade. It's just over managing a trade, whether the trade's going your way. Maybe you trail your stop too close. Maybe you get out before you really get to anywhere near your target because you're scared it's going to come back and it's going to take your money away. So we call those lennying. It's from Of Mice and Men. You read Of Mice and Men, probably. You remember the character Lenny, who likes to pick up furry animals when he loves them, but he plays with them so much he kills them.
Right.
So that's what we do. That's what some people do to trades. And part of the question to that is, okay, so we've got the trade on. We've got our catastrophic. I call it a catastrophic stop, but you don't want a catastrophic stop. You just want something beyond where you're actually going to take the risk on the trade, just in case something happens.
Right.
Do we get any smarter once the trade is on? Do you find it difficult to accept information that the market is telling you that may be contrary to what you think while the trade is on?
Okay, so it's important not to marry to a direction or what's happening in the market. You don't know. You have to have the assumption you do not know what's happening till it happens. The market is what it is. So you don't want to presuppose what it's going to do. You want to look at everything you can to give you certainty that it's doing a particular thing. So don't have in your mind that this is a short and it's going up. You know, everything is showing you that it's has an up move, and you have in your head, you're stuck in your head, it's a short.
Mm.
So don't marry yourself to a thought that is not backed up by what you're seeing on the screen. Don't marry to a thought or a direction. It is what it is.
Okay.
Read what it is.
All right. So, folks, it is the question and answer time. Get your questions in. I've got one here from our good friend Shubham. Every time I hit my target, I get protective and I don't want to give anything back. Is this mindset limiting my long-term growth as a trader? Great question, Shubham.
Well, you should always lock in your cash, and you should always be protective of what you've locked in, but not to the point that it inhibits you from taking another trade. And when you have a stop or you have a stop get hit, I can't tell you how many people don't get back in if it's working. You can get back in, but they're challenged to get back in because it wasn't the original trade. And so if you get stopped out because you moved the stop too much, go to yourself, okay, that got hit. Where can I get in again? Forward thinking, where could I get in again? And so look at where you could get in again to re-enter. Re-entering quickly is not a bad thing if the setup is originally there. And protecting your capital is okay, but not to the point that it freezes you up from doing anything. So you have to look at, is it emotionally keeping you stuck or not? Protecting your cash is always important. Set a goal for the day that you know you can make. I always say only lose what you know you can make in the day. Otherwise, it costs you more than one day's work. So set a goal for the day and then go to sim or go to practice mode, watch the markets, and it's too boring, I want to trade. No, don't get sucked into having to trade. When you're new, the best thing you could do is get your disciplines in control. There's not one book that I know on trading that doesn't have discipline 100,000 times in it. Discipline is the thing you have to manage. So the more you can practice that, walk away. Great traders know when to walk away. If you're off, if you're trading really crappy and you just are not on, it could be you, it could be the market, the way the market's reacting today. It might not be your market. Maybe it's the wrong market you're trading. Don't switch between markets. I always suggest staying with one to learn the personality and stay with that market. And if you're off, you're off. Go to sim or walk away. I like to stay because I like to learn something. Even at this stage, I like to learn something. Is there something that I could learn today? So stay with the markets and watch that. What could you do? Now he identified the problem. Now he should think about what's the solution. And what's the action he could take to fix it. If you get in that pattern, you're coaching yourself. You don't even need me. But you have to do it.
Right. Robin, just real quick, would you suggest to Shubham, he's got a good trade, he's gotten a profit target. Would you say take one more trade? Look for the next good trade, take that one more trade, and if it's a winner, that buys you another trade. You've talked about that before.
Sure. Yeah. I always like to earn my way to another trade. So if I have a winning trade, that earns me the right to take another trade. If I have a losing trade, I got to stop. I got to examine it, figure out what I did. And I sometimes will give myself one more trade. And if I can't make money on that next trade, I'm off. I have to examine it, switch to sim so I don't give back my money. The thing is not to build your bank account. And this is what people have been doing that some people I've been coaching. They hit their goal for the day and then they continue to trade and give it all back. How many times do you hear I hit my goal for today and I ended up negative?
That's right into our next question, I think.
Okay.
Smooth AF. Nice chat name. How can I maintain the right mindset when I've been profitable all day so I don't fumble opportunities due to the fear of losing my profits? Exactly what you were just talking about.
Okay, so
right?
That's the trading game. So if you hit your goal, you can create any kind of game in trading you want. It's all up to you. I'm just giving you suggestions. So if I hit my goal for the day, I get one more trade. I don't increase size. I stay with a small size. I take the trade. If it's a winner, I can continue. If you're winning and you're on a winning streak and you have winning patterns, I want you to trade. It's when you lose that I want you to control it and not give it all back. Don't hold on. Give yourself a dollar limit if you have a negative trade after you hit your goal. So if you go down X amount, that's when you're going to cut it. Have a place where you switch to sim. You either stop for the day, you go to sim, and then in sim, you earn the right to go back to live trading. Maybe you take 5 trades, or maybe when I get down to before I blow a valuation account, if I'm down to $100 left, I go to the micros, and then I give myself, I have to make $500 in sim before I can even trade live in the micros, because if I trade, I'm going to blow the account. So I put a game in place when I'm close to critical levels of my profitability, or if I'm going to run the risk of blowing an important account. So you can create any game you want. The key is to create control. Only you know how you think when you trade. I don't know how you think when you trade unless you talk to me. Hogue doesn't know how you're thinking in the moment. Only you know you. Great traders know themselves. They've learned how to read themselves. They can feel. You can feel when you're off. You can feel when you're not trading well. You can feel it in your body. I know you can. You can feel it in your body, and you got to say, "Oh yikes! I don't feel good." Get up, take a break, go to the kitchen, get yourself a cup of coffee, a glass of water, something to break the losing pattern. Getting up and moving is one of the best things that you can do. And H2O, always have your H2O, because your brain is on hyperdrive.
Stay hydrated.
And stay hydrated. Okay.
Some people want to know where you got your shirt.
In New York. In
Where
New York,
else?
I put it on just for you. It's my Wall Street. It says Wall Street in New York.
Bull?
I got it in New York. Yep, the bull, the famous bull.
All right. One of my good friends is asking, I think, a very important question. What are some effective ways to not allow trading struggles carry into your personal life?
I think it's reverse. How can you not let your personal life slip into your trading? Because it starts with your foundation, and the foundation that you have in your mind comes from your personal life. So a lot of times I'll coach traders, and I can feel that something's not right. And when I dig a little bit, I find out it's a personal thing. It's not anything to do with trading. So trading brings to the surface all of your personal emotional baggage, and it makes you deal with it whether you want to or not. So all
I like
your
that.
personal
Very well put.
stuff is coming to the surface when you trade. And so I have a group of I'm giving you statistics from the questionnaires that I've been answering. I've got a lot of successful people, had successful businesses in the past. They come into trading and they get hooked. They get hooked because they win early on. That could be the kiss of death. So they think it's easy. Oh, it's easy. I'll just double up on size. So what do? When they're losing, they double up on size and they go down faster. Never double up on a losing trade. Rule. Major rule. Never double up on a losing trade. So if you're going along and you're I forgot what the point I was going to make. It'll come to me. Okay. So be careful of I forgot what I was going to say. What were we talking about? What was the question?
Not bringing your trading anger, not bringing anything that happens in trading into your personal life.
Right. Okay. So if you're trading, you have to examine what is bubbling up for you. So I was talking about high-end traders. They have a business. They were successful in the business. They came to trading. They win early on, and then they can't seem to get it. And so they're frustrated because they were successful in their other business, and now all of a sudden they can't seem to grasp this. There's a lot of things to learn in trading. And so if you're new, you have to get your foundation. Please have a plan. When I get these surveys and I see people, I sometimes have a plan. I have no criteria, and I don't use my stops. Those 3 areas: plan, criteria, stops. That's the foundation. You have to have a foundation in your trading. Make sure you've got a plan. Your criteria should be 7 to 10 parts in your criteria. I look at this, and this, and that's enough to tell me I can enter the trade. 7 to 10 parts. Don't overtrade. Traders that are new shouldn't have more than 10 trades a day. If you're over 10 trades a day, you're over trading, and you don't have it. You don't have it. You've got to examine the plan. Something is wrong. If you see people in the room that are doing things you want to do, ask them what they're doing. Ask them what they're looking at specifically, because you're seeing the end result on the screen. You're not seeing what their head is telling them. So you've got to ask them, what specifically did you see to exit that trade? Was it just that level, or was there something else? Oh yeah, I looked at the dome for a second and looked at volume, or I looked at time and sales for a second and I saw selling orders come in, or I looked at this on the moving average and I realized it hit that. So they may see something out of the corner of their eye with all the windows that they're looking at, but they don't explain it in the room as they're trading. Ask them for the specifics. That will give you some of the statistics of their criteria. And for successful people, you've got to have a plan, criteria, and a stop. That's the foundation. And if you don't have that, you got to work on that.
Thank you. War Knights has a question. Every time I almost reach the goal, I fall. Using another word, FAIL. I don't like to use that word.
Okay.
Because of my mental breaks. How do I fix that? Getting right up close to that goal, and everything falls apart.
Okay. So is it a daily goal, a trade goal, or while you're in the trade goal? Give me more. Where is the goal? Is it a daily goal?
I would assume it would be let's just say a daily profit goal, or a trading combine success goal.
Okay. You should have, you don't have to have a goal for the day per se. You figure out what you should be making in the week, divide it by 5, and figure out about what you want to make per day. You're not going to make the goal exactly that for the day. You could be less, you could be more. If you're trading well, you trade more. If you're trading less and you're losing, you want to stop. So during the week, you're going to have ups and downs, but at the end of the week, what was your average? And so look at your average. Don't stick to a goal. So by having a goal and not hitting it works against you. Will you feel better in the morning not hitting your goal? Or will you feel better in the morning if you just said, I had a great trading day yesterday? So don't attach it always to a solid number. Be flexible. We have to be flexible in trading. If we had one plan and one thing worked all the time, we'd all be trading it. It doesn't work that way. We have to be flexible with our plan, the market, with what's going on, our indicators. Everything has to be flexible, and it changes.
I always tell people, when you're, up near the combine profit target, forget about it. Just look for the next good trade. Nothing that has happened has anything to do with what's going to happen. You've got to be in the moment, in your process, looking for the next good trade. Go ahead, Robin.
Okay, one more thing that he's doing incorrectly. I'll put money on it. If you're close to your goal and you start to emotionally get thrown off, for lack of a better word. It means you're looking at your P&L. If you have your P&L on the screen or something that gives you a dollar amount of what you're making on the screen, take it off and put a Post-it note over it. Do not look at a dollar amount. Switch it to ticks, switch it to anything else, but not the money. Our mind reacts strongly to money. And so if you're looking constantly at the goal and you're not focusing on the trade, if you cover up the dollar amount and just focus on making a great trade, you'll go over your goal before you know it, and you'll be fine. Don't look at the dollars.
Right. Yes.
Bad habit.
And I think Soban has a question in the chat here, is asking, how can I control greed, which eventually turns into revenge trading, eventually turning into a losing trading combine, and I have lost a lot. You're focusing on the money instead of the
money.
Yep. Yes.
Yep. Focusing on money is horrible for a trader, just horrible. And I can't tell you how many people do it, especially in the situation where you have contests and goals in the room. That's causing you to do it. Look at the end of the day. Look at the end of the day. Be surprised at the end of the day. Have all those winning trades, controlling those losses, and then pick up your Post-it note, look at your dollar amount, and go, woohoo! I didn't even know I could make that. It will disappear. You won't even, it will just disappear. Focus on the quality of the trade. Quality of the trade. And money's going to follow.
One thing you can do
Get the money out of
is
there.
change your platform from showing you the money for each trade to showing you the ticks.
Right. Absolutely agree.
All right, I think we've got room. I think we have time for about one more here, Robin. So,
okay.
Okay.
And thank you so much for doing this.
Oh, it's our pleasure. It's my pleasure. I love every time I get the chance to have you on, spend some time with you. Lissy's asking, do you ever dig into the why of why a trader can't stop taking bad setups, etc.? Perhaps they have a real problem with greed, for example. Do you ever dig into why they feel greedy?
Oh, my whole business is the why, finding out the why. That's my whole business. So, of course, I'm the master of questions. So if you ever do coaching with me, I'm the master of questions. One question after another. That's how I uncover a lot of times that it's not the trading, it's something personal, because it's coming from something deeper. So yes, absolutely. And it's a great question that you can ask yourself and keep digging till you find the answer to your why. Why do you think you're doing that? Why do you think you keep repeating it? And so it may bubble up, I'm greedy. It may bubble up, I'm stressed because I have to pay the rent. I'm maybe bubbled up because I'm late on a bill. It may bubble up. It'll bubble up all sorts of things, that I'm not feeling well. My mother's not feeling well. My brother's not feeling well. It'll bubble up something. You figure out your why. Can I make one quick statement?
Of course.
I have a lot of traders that filled out questionnaires over the past couple months. I'm offering a $200 discount to the traders from May if they're going to do a coaching 3-pack with me. So all the traders that put in surveys in May, you get an extra $200 off, because you should have been doing a follow-up call with me to see what's going on. But there's a lot of you in there that need to get coaching. And if you're still losing from May, you really need to call me, because there's a whole bunch of you in there that I'll put money on are still losing from May, because you're stuck and you haven't figured out your why.
Thank you. I just put the link to your website in the chat.
Yeah.
I was going to put the link to the emotional trading test in there. Can I do that as well?
You can do it. It's on the page. It's in the top corner. I get deluged with it, and it takes me a while to do them. But yeah, you can certainly do that. Everybody knows I read each one separately. I know they're the same questions, but they're in a specific sequence, and I can tell what's going on with the trader as I go through the questions. by the time I get to the end. Most of them are dealing with blocks, emotional blocks that they've built up over time.
I don't want to get you too busy now.
No, I know. I don't either. And then the other thing I suggest is go to the media section of my website, and there are some presentations on there. There's one that is like 7 hours long. I'm an hour within that. You just scan forward and you can see where I am. You can go through all those webinars. You can go on YouTube and go through those webinars. That will give you an idea of how I coach. All my information doesn't change. All the emotional stuff that happened when I was in the 80s is still happening today. So there's all that is valuable information, and the ones on Topstep.
Just so you know, that emotional questionnaire, she goes through those personally and goes through them and deciphers them. This is stuff that people don't really do. Robin, we can't thank you enough again for being with us. It's always such a pleasure to have you here. If you have one closing comment for everybody before we move on.
Yeah, I hope I added value. I had a little quote that says, "Be strong but not rude. Be kind but not weak. Be bold but not bully. Be humble but not timid. Be proud but not arrogant." So I'll leave you with that quote. And thank you, everybody. Thank you, Hogue, for doing this. I love being with you guys. Ask me any questions that you want. I'm available. And if you need coaching, it's better that you get rid of the block now than carry it with you, because it's the number one reason that traders fail. Unfortunately, I had to tell you something different, and I'm not looking to sell stuff, but it's the number one reason. Have a wonderful day.
Greetings, traders. This is Coach Robert with another episode of Topstep X in 5 minutes or less. In this video, we will review the DOM, the order panel, and the time and sales settings. Starting with the time and sales, there's really not much for settings in here, but the font size that we can see in our price structure here. The other setting is the size of the minimum contracts that will show. It's set to 1, so from 1 contract position or higher, this is set to 4 contracts or higher. This is great for identifying larger orders. So if you only wanted to see orders that had more than 5 contracts traded, you would set this filter to 5. The DOM settings are here, and the order settings are here. They both pull up the same panel, the DOM and order card settings. We have the DOM cell padding. This is the size between all of the numbers, and here is the font size. Those are adjustable, of course, to your liking. The top section are for these buttons down the bottom, so you can customize them to the way that you like. Hide the reverse position button, and I like to hide the cancel all. Make sure I save, and there we have it. But again, these are all customizable, so you can set it up the way that you like. Additionally, we have an auto center on the DOM, meaning we can scroll up and down. We can see where the ask is. We can see the volume. We can scroll down to the bid prices. If we wish to place bids lower, we can just add it right onto the DOM like this. Or we can just choose to auto center, and it will keep the last price in view, and we can see the DOM moving up and down. When in an active position, this will show the price of the active position. And as you've seen in a previous video, there's a break-even button right here. All of these buttons are the same. They do the same sell market, buy market, are the same on the order panel. You can have multiple order panels, and these all can be adjusted by width, just like this. So let's say you wanted to have the order panel on the bottom of time and sales. We just move it over, and we have our adjustments, and we are ready to go. This concludes the section on the order panel, DOM, and time and sales settings.
right, it is finally time for the Ask Me Anything with Dr. Brett Steenbarger, and everybody knows her and loves her, Anne Marie. Anne Marie is a trader. You know her here. She's been all over the place. She's currently in Finland, and she's also the author of the trading book. Great to have you with us, Anne Marie. And Dr. Steenbarger, if you don't know him, you should. He's the author of several trading books, including The Psychology of Trading, The Daily Trading Coach, and my personal favorite, Enhancing Trader Performance. Dr. Steenbarger has worked with hedge funds, huge traders from all over the world. We are very lucky to have both of our guests with us today. Anne Marie, how are you feeling? Are you ready for the session?
I am so excited. Got my notebook.
Awesome.
Can't wait.
Awesome. Well, Doctor, if you have any comments that you want to talk about before we get started, and then after that, we can jump right into the questions because we have a lot of really good questions. And thank you all for providing all these great questions. This is going to be a wonderful session, and we're really looking forward to it. Doctor, any comments before we begin?
Yeah, just a couple of comments. You may have noticed that we are getting closer and closer to an election. And there's a fair amount of uncertainty as far as the projected outcome of that election. But that has created, among the people I work with at hedge funds, that's created some uncertainty. We see a lot of hedging with respect to, for instance, the VIX futures. And we see a lot of concerns about volatility going forward. So the next few weeks promise to be particularly interesting, and we could see some meaningful moves on top of the situation in the Middle East, which has been a real driver of crude oil prices lately. Whether there'll be expanded war between Israel and Iran, or both sides will cool off. And we're seeing quite a move today in the crude oil market. So a lot going on in the world that's impacting prices across different asset classes, different markets. I'll mention one other thing. It's on my blog site, Trader Feed, TraderFeed.blogspot.com. And the idea is a really important one, and hopefully we'll discuss it going forward today. But the idea is that learning is state dependent. In other words, we are most likely to make use of our learning if we are performing in the state that we were in when we learned the material. So what this means for traditional trader education and traditional trading psychology is that we're doing things all wrong. If I'm teaching people trading psychology when they're in a nice, calm, collected mode at the end of a trading day or on a weekend, or maybe they're listening to a podcast or watching a video, they're in a totally different state than when they're actually taking risk and seeing things moving. And so the learning doesn't carry over. It doesn't transfer. We need to learn in the states that we're in when we're going to be performing. This has profound implications for how we train ourselves.
That's very interesting, Doctor. That's probably why I've never been able to read a book by sticking it under my pillow while I sleep. You really have to be in the state of mind.
Yeah, you're just not absorbing it, right? Right. But it's a real challenge, and people hope that they're going to take classes or they're going to read material, and suddenly they'll become great traders. The classes give useful information. The trading psychologists provide useful perspectives. But in applying them, we have to do it in real time. which means that we can't just jump into risk taking and hope that what we've learned will automatically transfer.
Very interesting, doctor. Very interesting. So, with that thought, I mean, when you're speaking to a trading psychologist or you're learning something about trading, what would you say is the best way for somebody to put themselves to take what they've learned and then use that in a at risk or stressful situation? How do you take what you've learned and then be able to use that in that situation to help you learn in that risk type situation?
Yeah, so the analogy I used on the blog post, and if people look, they'll be able to read it in more detail. The example I used is learning to jump with a parachute. Now, so jump from a helicopter, jump from a plane, learning how to skydive. Well, I could teach courses in how to pack a parachute, how to deploy a parachute. I could teach classes. I could show videos about how to jump from helicopters. Then you get on the helicopter and it's time to actually make the leap. And how much of what I've told you is going to stick?
Right.
In a panic. So it doesn't transfer. So how do we train people, like in the military? How do we train people to jump from planes and helicopters? Well, we start in simulation mode. They're tied to a line. They have a parachute on, but they are securely attached to the line, and they learn to jump from a platform up high, deploy their parachute, and if they make a mistake, the line protects them. And they do it again and again and again and again, and they simulate. And gradually the simulations get more and more challenging, and eventually they do it from a moderate height without the line, and then they increase the okay. So there's all sorts of simulation and all sorts of practice along the way, so that there's lots and lots of repetition. Because if something is repeated, if we encounter it many, 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 many times, it loses its emotional control over us. If I tell you a joke, the same joke, again and again and again and again and again, eventually it's not going to be very funny, right? It loses its emotional power. Okay, so that's what we want to do in training. So a trading psychologist like myself can give some pointers about what to do in practice and how to do it. And you can try to apply it. And then if there are questions and problems, you can refine. But you can't just jump into taking risk, like you just can't jump out of the helicopter without having a lot of simulations, a lot of practice beforehand.
But eventually you've got to make that jump, don't you?
Eventually, and excuse me, and that's really the key word, Hogue, eventually. So many traders are eager to succeed and eager to make money. They want to put the trades on right away. They want to take risk right away. And then they wonder why they're getting all emotional. It'd be like if I feel a need to jump out of the helicopter right away, and then I wonder why I'm getting panicked. Well, it's not something I need psychological techniques for. I need to structure the learning process the right way.
That makes so much sense to me, Doctor. I mean, I was in the S&P pit trading 1 lots, and I got hit on a 5 lot, and the abject fear that came over me is thinking that I'm used to trading 1 lots. Now I have 5 on was something that it takes time to increase that kind of risk and that kind of that to be able to handle that kind of risk. I remember my hand shaking. I couldn't even write the trade down.
Wow. Yeah. And eventually it becomes so routine that it doesn't throw you at all.
Right.
There was a time when I was first learning how to drive a car, and it was very scary, right? And it becomes second nature. But it's through repetition, it's through routine, it's through practice. And many times, many times, the psychological challenges that people are having in their learning process is because they're not giving themselves enough time to practice and get familiar and make it routine.
All right. Well, before we get into the questions, Anne Marie, do you have anything you would like to add to what we were just talking about?
It just makes perfect sense. It's sort of like a guy that comes up from AAA and he's got great skills, and his first day in the show, he walks four guys, right? Or he gets shelled. It's just, it's a different space. So that makes tons of sense. It really, really does.
Thanks, Anne Marie. All right. So for our first question, this is a question that I've seen a lot of traders kind of pondering. I know that there's one in particular that I'm really excited if he's here for him to hear your answers, Doctor and Anne Marie. So here's the first question: as a funded 20-year-old that's been trading for 4 years, now with a newborn child, if you were in my position, would you focus on day trading as your career, whether it be getting a series license and trying to work for a firm, or look for other transferable skills in other industries? Having a child does change things.
Having a child changes things amazingly. I have 5 children, and it's not a linear function. 2 are more than twice the work of 1, and 3 are more than 3 times, and so it takes real time and effort. But most importantly, it takes real teamwork. And if you have a spouse who's also working and has other responsibilities, then it can be very difficult to maintain the kind of hours that trading often involves. And that's one of the reasons why one of the common issues that people bring to me when they meet with me is problems in their relationships, problems in their marriages, because the work of trading taxes that teamwork. So you want to be aware of that. You want to be sensitive to that. It can be done, but you really have to be able to pick up the slack for each other. I like the idea, and I'm biased because this is how I did it myself. I like the idea of having a full-time job and a full-time career while I'm learning trading and while I'm developing my trading skills. It takes so much pressure off. It also gives you a fallback, if the trading doesn't work out. And it takes the pressure off if you go through a period where you're not making money in trading. It's not all of a sudden like your family doesn't have money. So I think there is some wisdom in what the questioner is asking, to have a secure base and then use that secure base to work on the trading over time.
Anne Marie, I'm sure you have some thoughts on this.
Yeah, I totally agree with that. There's so much pressure in trading anyway. It's better to have something stable and then work at being consistent, because consistency or a lack of it is the bane of all our existence, right? And you got to get consistent in your process before you can go, all right, I'm just going to go jump right in. And I jumped right in, and it was really the worst thing for me to do because the pressure made me lose a lot of money. And so I would definitely say have a foundation, just like Dr. Brett said. It doesn't feel as exciting to go, I am trading and I'm doing this, but it's the wise thing to do, I think.
Well, and good family. I agree with you, Anne-Marie. Now, there are, I should mention, in the world of finance, I work with hedge funds mostly, and people who join a hedge fund, they've typically had some training, but they join with a salary. And it's typically a 6-figure salary. And then they get a bonus on top of the salary. That's how they can make a good amount of money. But that salary provides a cushion of safety and security that the average short-term trader would not have.
Well, from personal experience, I'm familiar with this. I was a local in the S&P pit. Got married, was making money, losing money, overall profitable, but I was certainly not the best trader in the world. And when my, first daughter was born, I had an opportunity to step up and fill orders. So I became a filling broker, and that was, a little bit more solid income, but it also kept me in a position where I was going to be able to trade alongside of that. Maybe not in the S&Ps, but I was able to trade in the NASDAQ or other markets while I was doing that. So, and I don't know if I would have survived being, a local trader or just an outright, speculator after my first daughter was born, because it does add a lot of pressure. Corey, I hope that really, really helps your kind of decision making in that. And it's always a personal decision. And so great questions, great answers. And hopefully a little bit of my experience will help you make your decision. All right, we've got a couple of kind of related questions here. I've kind of put related questions together. We have Stefan that is asking, first of all, thanking both of you for being here. My question is, I realize that I feel fatigue after watching the charts for a couple of hours. Seems like my mental capital is gone and I feel mentally drained. This happens usually around 2 p.m. Eastern Standard Time, but I still have things I want to accomplish since it's still early in the day. What is your recommendation to recharge my mental capital and to get some more energy to keep going? And the other one is, can you share some techniques to reach and maintain a state of flow? How can I track this stuff for a measurable frame of reference? And anytime you're, then this is me talking now, anytime you're getting tired, you're losing that potential state of flow. I've noticed whenever I was in a state of flow, the minute I realize I'm in a state of flow, I'm no longer in a state of flow. Doctor?
Yeah, no, great questions. In the psychology research literature, they talk about concentration being a muscle. And if we focus and concentrate, eventually we tire out that muscle, just like if we were using our muscles all the time in the gym, eventually we would become fatigued. So we all have those limits. And typically that's why it's helpful to be able to take short periodic breaks, and breaks that really refresh you. It could be with social time. It could be by having a bite to eat. It could be by getting a breath of fresh air. But getting away quickly and doing a reset can help tremendously the concentration. Now, as I believe I've shared in a previous talk with you guys, I do work myself in the area of biofeedback. There are devices, the one I use is called Muse, M-U-S-E, that measure our brainwaves in real time. And it tells us, are we in alpha state, which is more in the flow? Are we in beta state, where we're more charged up? And we can learn in real time techniques for keeping ourselves in that alpha state, keeping ourselves in that zone. So this is something that can be trained. And if you look up, just Google neurofeedback or neurofeedback research, you'll see a lot of information about how to train the brain to get better and better and better at entering flow, but also sustaining flow.
Man, I wish I had that when I was younger, because it's true. I mean, the minute you realize you're in flow, you're out of it. Anne Marie, any thoughts on this?
I'd like to ask Dr. Brett what he thinks about adding breathing techniques to, there's a lot of stuff out there about breath. What do you think about breathing techniques at the desk? And, sometimes I do deep breathing. I end up hyperventilating myself. But how do you How do you incorporate that?
Yeah, and that's a great example, Anne-Marie, of something you can do during a break where you just empty your mind, like in meditation, you empty your mind, sit very still, take very slow and deep breaths. And of course, what you're doing is slowing yourself physiologically. Your heart rate comes down and your muscle tension comes down, and you're also tuning out cognitively and giving yourself a bit of that rest. That can be very effective. Now, the ideas can be combined. So, for instance, you can do meditative breathing while you're hooked up to biofeedback.
Yeah.
It could be heart rate variability feedback. There's a site called HeartMath. It could, which is very good at measuring stress levels. It could be the brainwave feedback that I mentioned. But you can use the deep breathing to actually see, am I getting myself in the zone? Typically what happens, my experience, Anne-Marie, for what it's worth, is that people do a few deep breaths and they hope that that's going to transform their consciousness. They don't stick with it long enough to really get the focus. It does take a little time, and it takes practice.
Doctor, we hear about the state of flow quite a bit. In your words, what is a state of flow?
Yeah, a state of flow is where you're so absorbed. There's a research named Csikszentmihalyi, and he talks about flow as a state in which you are so absorbed in what you're doing, you lose the sense of time. Time just seems to pass, because you're just so into what you're doing. And typically that happens when we're engaged in activities that are of an optimal level of challenge. If things are too easy, we don't really get into the flow. If things are too difficult and frustrating, we certainly don't get into the flow. But when we're doing something that absorbs us, that speaks to us, then it's easier to become fully absorbed and be in that state of flow. The research tells us that when we are in that flow state, we tend to have more well-being, more good feelings, good experience psychologically, but we also tend to be more creative. And so we literally can see things in markets better when we are in that zone.
Thank you very much for that answer.
The opposite of flow is being highly distracted, being very frustrated, very distracted. That would be the opposite of flow.
So, I mean, if you're having a hard day, you're losing money, something like that, you're probably not going to find the state of flow in that regard.
Yes and no, Hogue. It's really interesting. Even the best traders, and I've worked with some very, very successful ones. If you look at the hit rate of their trades, what percentage of their trades are profitable, it's not far north of 50%. They're really good at holding trades that become good-sized winners, and they're very good about holding the downside on the ones that don't work. But if you have a 50-50 hit rate, you're going to go through periods, and you can calculate the odds, where you have 3 losers in a row, 4 losers in a row, and so forth. And so they are accustomed to that. They accept that. But even more importantly, they view the losing trades as potential education. This is telling me either something about myself, maybe I did something wrong, or it's telling me something about the market I'm trading. Maybe there's something I'm missing in the market. So ironically, the losses could get them focused on what they're doing, get them focused on the market, and they could get into the zone that way.
There was a guy standing next to me in the S&P pit for a little while, and he would, he'd have a trade on. I could watch what he was doing. And every loser that he took, he would say, okay, good. And finally I said, why are you saying, okay, good after each losing trade? He says, because I don't view it as a loss. I view it as an opportunity to learn something. There was something I'm missing. I'm getting information from the market. I'm learning something from the market when my setup doesn't play out. And I think that's probably a good way to kind of turn that into, a way to get into a state of flow. I mean, you can be down money and then find that state of flow, and then I end up having a really good day.
Great point and example. Now, Anne Marie and I share an interest in spirituality and religion, and
as do I.
Good. And so when we have beliefs, spiritual beliefs that put things into perspective, it changes how we view what otherwise would look negative. So, for instance, if this law is given to me as learning, if this is something that's going to be making me better, well, then I can feel grateful. I can say, thank you. Thank you for this lesson. Now, no one likes losing money, but if that's an investment in learning and your development, then there's something you can feel good about, and it doesn't have to be a frustration.
There was a line Morgan Freeman said in Evan Almighty when he was talking to Evan's wife, and she didn't know that she was talking to God. He says, "What do you think God does when you ask him for discipline? Do you think that he just fills you with discipline, or does he give you the opportunity to be disciplined?" I love that answer.
Yeah.
Love that answer.
Yeah. Perfect.
All right. Well, let's move on to the next question. And I think this is one you're both really going to enjoy. As a neurodivergent ADHD trader, I am only as successful as my last trade. I can't seem to get myself into that autonomous routine of consistency and discipline. If I break my rules, I will look back and wonder why I was even doing the things I know I shouldn't do. It's almost like I go blind, or that the wrong parts of my brain just take over, limbic versus prefrontal frontal cortex things. Whether it's boredom, dopamine addiction, or just not being able to do the things you're supposed to do, what do you suggest for other ADHD traders to combat these problems? Now, there's another question that involves dopamine. Can you make a comment on how lifestyle habits impact trading, particularly dopaminergic activities, and provide advice on how to lower dopamine baselines, which ultimately impact one's desire to be in the market?
Yeah, both really good questions. So I teach in a department of psychiatry at a medical school, and there is in our department a clinic that deals with ADHD. And so I'm familiar with a newer generation of medications that have been quite helpful for ADHD. If we don't have the right brain functioning, this is true in major depression as well. If we're not producing the right neurotransmitters, if we're not firing the right way, then it's just like, I have a pancreas that doesn't work, and I need medication to be able to produce enough insulin to be able to regulate my blood sugar.
Mm-hmm.
So if I have diabetes, I don't say, I don't want to be on a medication, I should control it myself. But when it's the brain, we tend to not necessarily feel that way. But there are medications that are safe, they are not addictive, and that can very much help ADHD in general. And I've seen firsthand how they can help trading. So I would first off, as advice, encourage that person to get professional advice from a specialist and see what's available. The second thing is back to the biofeedback idea. We can train the brain, and biofeedback is one of the training devices that's used with children and young adults who have ADHD, because it teaches them how to focus. There's a fun app where if they stay focused, they have like a bird in the air, and if they keep their focus, the bird keeps flying through the air. And if they increase their focus, the bird goes higher, higher. And if they lose their focus, the bird comes down and eventually would come down altogether. And so it's a great little game that trains people to keep their attention, keep their attention, keep their attention. So that's a worthwhile direction also. And asking a specialist about that is really an important way to go.
How much is dopamine involved in trading decisions?
Well, ideally, not much at all. Right? I mean, dopamine gives you that rush, and
the feel-good thing, right?
The feel-good thing. And look, I mean, we're all competitive people in markets. We all want to win, and we do feel good when we win. But feeling good when you win is different than looking for a thrill. And if you need thrills in your life, then you need to make sure that they're being met in other areas of your life so that you don't have to use trading to get your thrills.
Excellent.
So it's so important because sometimes, and both of you talk about this a lot, sometimes the best trade is not to trade. Sometimes there's not great opportunity. But if you need the thrills, you need the excitement, you won't be able to honor that. So get the dopamine rushes elsewhere, and then you can use trading to make money.
There you go. Anne-Marie, any thoughts and questions on these subjects?
No, I know this personally. I went through the University of Michigan's NeuroCore program, and what they did was hook you to everything. They put you on a television, and they're playing a movie, and they tell you to manage your breath. And if you don't get the right breath cycles, the film stops, and they record everything. So it's another, and literally, I was the only adult in there with all these kids. And it was just, it's a great way for you to tune in to whether you have that, I'm going to call it a deficiency, but it's just a trait. And if you have that, then there are things that you can do to work on it. And of course, those medications are life-changing. Personally, I can tell you.
That's great, Anne-Marie. And let me mention the other problem, kind of the opposite problem, which is more one that I have. There are some people who are wired in such a way that they need quite a bit of emotional stability. So if something is going to produce lots of ups and downs, really exciting, you could win, you could lose, or sometimes relationships, they can be full of drama. But I know how I'm wired. I don't like drama. I don't like drama at all. And so it's sort of the opposite of seeking the dopamine rush. And so for me, what is a challenge? A market that suddenly becomes really volatile. And now all of a sudden, there's more risk, more reward, and that throws me. And so I have to train myself to deal with that excitement or that stimulation as opposed to dealing with the lack of stimulation.
And how do you do that? What do you do?
I do two things, and this I've had to learn through hard experience. I'm very quick to size down if I see volatility rising, because I want to keep risk and reward in a certain band given my account size. So I'm quick to monitor volatility and size accordingly. And the second thing is, if markets become volatile and I don't really understand why they're acting in that way, I quickly exit. And it's sort of like the physicians saying, above all else, do no harm. You know, if I don't understand why things are suddenly moving around, maybe there's been a geopolitical event, maybe there's an economic announcement I'm aware of, then I pull back. So I control my level of arousal, my level of ups and downs with sizing, and by my willingness to step back when things aren't right for me.
When something changes quickly, you're and you don't understand why, you don't know why it's happening, you take yourself out.
That's right.
Take yourself out of the situation until you get an understanding.
For a trader like me, what's the greatest challenge? Let's say I see things setting up really well. Like we've been in a tight range and suddenly we're breaking out to the upside and increased volume. Mm-hmm. I'm meant to go after that. I'm meant to size up. But I don't like all that P&L volatility. Mm-hmm. So I've had to push myself in doing my own trading psychology to size up in a controlled way, but really practice to normalize that experience, because otherwise you're never going to make more from your wins than you lose with your losses. And if you're around 50-50 on a hit rate, you won't make money. Wow.
One of the things I tell traders all the time is to try and remain centered, not too happy, not too sad, you sound like you're very centered.
At my best. And but it takes centering, because there's so much that goes on in markets. There's so much that goes on in life. Mm-hmm. We had a question from someone who has a newborn. And so you're trying to trade and suddenly your newborn, God forbid, is sick. Well, my goodness, it is crying and crying and crying, So we can do everything we can to center ourselves, but life sometimes intrudes.
Yeah.
That is 100% true. 100% true.
Quickly, Dr. Red, that just brought up something that you said in one of your nearest posts. You talked about the muscle and the psychology of aggressiveness when you said, hey, the market's asking me to size up. Is that just something that how do you develop aggressiveness in the right spaces when you're trading?
Such a good question. It's such a good question. How does a boxer know when to really go after the opponent? For a good part of the rounds, you're dancing around the ring and you're avoiding getting hit. And you're trying to score a few points, with jabs. But then you notice that your opponent is wobbly. You notice that your opponent is hurt. And you're meant to go after that knockout. It's noticing that vulnerability. You can't make it happen. You can't predict it. But you have to be open-minded to seeing that and training yourself to go after it. And again, you do that in practice. Boxers practice in the ring. And traders can do that as well in their reviews and in their simulated trading. But you have an idea of when the market is setting up in such a way that you have a high reward to risk opportunity. Typically, in my experience, and I'm sensitive to this because I do work with financial institutions, it's an opportunity when bigger players are leaning the wrong way and they've got to get into a trade. So the bigger players have been short the market, and suddenly we get some news about the potential for a rate cut from central banks. Or the market has been short a particular stock and it comes out with a favorable earnings report. There's a catalyst, and the big players are offsides, and they've got to chase. They've got to cover their shorts, but they also have to accumulate positions. You can identify that in real time through shifts in volume. This is where relative volume is very helpful. And you see that the volume is increasing for that particular time of day. The bigger players are getting in, and boom, you can get right in and ride their coattails. And if you're breaking out of a range or breaking from a low, you can set your stop at a reasonable level so that your risk reward is good, even as you're sizing up.
Thank you.
So know when you got them and really go after them. You got that other boxer wobbling.
It has to come to you. It has to come to you. If you try to make it happen, if you force it, then you're back to the dopamine rush situation.
Okay, that's something that we talk about a lot here. Is
you're going after a big win, a big win, a big win. You've got to be calm, and see the opportunity. That's why I use the analogy of the military sniper. You're sitting in the weeds, quiet, quiet, quiet. You're hiding. And then here comes the high value target, insight. And that's when you're meant.
That's when you pull it. That's when you go.
That's when you go.
We tell people all the time, if you go looking for trades, you're going to find them. But it's the ones that seem to come to you that always seem to be the better opportunities. I like the way you put that, Doctor.
Yeah, and that's because for really good traders, what's at work is pattern recognition. If you've seen enough markets on enough time frames, you see what's happening. You see something, an example that I've used recently in my writing, you see an example where you're selling off in the broad stock market, you're selling off in many sectors, and one sector, maybe the technology stocks, are holding up. You're not seeing a lot of selling in those. And you say to yourself, well, wait a minute, that shouldn't be happening. There's a floor under here. Let's see if the relative strength translates eventually into absolute strength. So you've seen that pattern play out again. And as it starts to play, you've seen it, you've been there, and you can go for it.
Awesome. There's a question here, and I think every trader deals with this to some degree or another, and we apologize. We won't be able to get to everybody's question. I've tried to kind of collect them into similar questions. This one really sticks out to me, and it's something that I've always dealt with. Pete sometimes struggles with negative self-talk, which, of course, impacts his trading. How do you deal with negative self-talk? What is the key to kind of building that winning mindset, or, if at all, being able to quiet that negative self-talk?
Yeah, so this gets into what are called cognitive techniques that we can use to improve our trading. So let's use an example. I'm going to call on you, Anne-Marie. So you're trading, Anne-Marie, okay? And putting you on the spot here. You're trading and you take a loss. And I'm sitting beside you and I say to you, I can't believe you took another loss. How could you have made such a stupid trade? You keep doing that, you're going to lose your money. Eventually, you're going to lose your account. Now, what would you say to me?
I would.
We'll keep this to PG-13. What would you say?
Okay. I think I would say, you do you. I'll do me. I got you.
Yeah. That's very diplomatically said, by the way. Much better than STFU. But the idea here. That's a stock on the NASDAQ. STFU. No. Okay. Anyway, so the idea here is that you have to learn to talk back to your negative self-talk. If the negative self-talk were coming from me, Anne Marie would have no problem talking back. Hey, you do it your way, I'll do it my way. I've got to learn in my own experience. So she's pushing back. We have to imagine, visualize that our negative self-talk is coming from someone else. And how do we want to come back to that? Because if we can push back, if we can push away and not identify with the negative talk, then it won't dominate our trading. The problem is not that we have some negative talk, but we're identifying with it. We're absorbing it. We're believing it. That's a good word for it. And so we want to say, wait a minute, where is this coming from? Would I be saying this to someone else in this situation? No, of course not. I need to be a little more accepting of myself.
I think that's a good way to think about it, is if you wouldn't say it to somebody else, you probably shouldn't say it to yourself.
Exactly. Yeah. And most of us have the social skill and sensitivity that we wouldn't say it to someone else. Just to be able to take a quick time out and say, wait a minute, is this constructive? Is this going to make me a better person, a better trader? So you're learning to interrupt the negative talk and replace it, not necessarily with positive talk, because maybe we did make a big mistake. Maybe we did do something wrong. You can't always be positive, but you can always be constructive. Constructive self-talk means learning from experience.
What would you say to somebody who, when it comes to negative self-talk, thinks more about feeling it and desensitizing the feelings from feeling it deeply and feeling it and just letting it desensitize itself that way? Does that sound like something that you would agree with?
I wouldn't, because my leaning is to intercept it up front before it creates all sorts of negative feelings and disruptions in me. So right away, I want to be sensitive to it, just like I would be sensitive to it if someone is trading next to me and starts saying all this negative stuff about me. I'm going to tell them to be quiet. I need to focus on my trading. And so I want to be able to catch myself in that mode and tune that out. Now, it can be talk back to, well, yes, and that's what cognitive techniques are all about, right? I mean, if you look up cognitive therapy, and I've written some about that in the Daily Trading Coach, we can actually keep a cognitive journal where we replace the negative talk with more constructive talk. And so we're practicing changing our thought patterns.
So you take a trade and you go, your inside is saying, boy, you're an effing idiot. Why the heck did you take that trade? You could say back to it, hey, that's not true. I am not an effing idiot. It just wasn't a good trade. Maybe it wasn't in my process, but I'm learning. So you STFU and you be you and I'll be me and move on to the next opportunity.
Right. Because I'll say to myself, well, I will be an idiot if I don't learn from this experience. Now, let's go learn. What can I take away? If I did something wrong, or there's something in the market that I need to take into account, let's make this constructive. Let's learn from it. Let's use it to make me better. Then I'm not an idiot. If I don't learn from it, then I'm an idiot.
All right. Awesome. So most of these sessions are always going to include something about fear. And here's the fear section. I've got a few people. I've kind of put them together. We're just going to kind of talk a little bit about what Tess Face, Steven, Ryan, Sean, Marcelo, and Vereen are thinking about here. So one of them is having trouble not holding on to winning trades long enough. Probably something a little bit fear-based. Increasingly intimidated by high potential risk and high potential gains, even in sim accounts. Biggest problem in trading is I hold on to losers way too long. How can I get better at cutting my losses? Fear of loss or avoiding loss. Been scared to take trades, even when they're the correct trades. In situations where you notice fear and greed influence your decision making. How do we manage those? This is a lot to digest here with all these questions. But there's another trader that makes money in a practice account, no problem. Every time they get into a funded account, they lose it within a couple of days. I kind of feel like these are all kind of fear-based outcomes.
Yes, and the latter is more of an example of what's called performance anxiety, typically, that once we have real money on the line, that suddenly, in practice, we can be okay. Yeah. And so jumping from trading on paper to the funded account in real time may be too big a leap for someone, and they may need to trade on their own with a very small account and get accustomed to the risk taking, move their way to going for a tryout. But typically, performance anxiety is something that we can overcome with the right kind of practice and repetition. There were a number of examples of fear that you gave with the questions, and each would be dealt with somewhat differently. But I'll answer in a broad context, and maybe we can get into details at another occasion.
Okay.
Many times, I'll give two answers. Many times, the fear is not just a fear of losing, but a fear of feeling like a loser. That we're fearing failure. And so we need to rehearse the mindset that losses are part of the game. There's inherent uncertainty in financial markets, and that our evaluation of ourselves is based on our learning and our growth and our development, not by our absolute P&L at any moment. So again, it's back to the cognitive approach, changing our thinking about success and failure, because if we can learn from quote unquote failure, then it's not so much of a threat. The other approach that I think I've shared with you is called a solution-focused approach. People have patterns of problems, and they come to someone like me, and how can I overcome this negative thinking? How can I overcome this negative pattern? In solution-focused work, we look at when problems are not occurring. When have you been trading and not been overwhelmed by fear? When have you been trading and you've been very constructively focused? And what were you doing at those times? So instead of trying to remove or lessen the negatives, you're looking for occasions when those negative patterns are not occurring, because the odds are good that at those times, the person is doing something right. That might reflect their best practices. So let's learn from the exceptions to the problem patterns and do more and more and more of what works.
I like that.
Traders don't spend time focusing on their successes, focusing on what they do right, and learning from them, and building on those strengths. And by the way, that's the topic of the book I'm writing right now.
awesome.
Applying positive psychology to trading psychology. But we do things
Excellent.
right, and we're doing things right because it reflects our strengths, something we're good at. But we write our journals, we review at the end of the day, and we focus on the negatives, we focus on the losses, we focus on the frustrations, and that just magnifies those. Let's look at what we did right. Let's look at our successes and learn from the best of what we do.
That's just more drama when we just focus on all the bad things,
I think. And again, we wouldn't want someone who's reviewing us to do that.
For sure.
100%.
Yeah. Good questions.
Very, very good questions. And thank you all for sending them in, of course. And as always, we apologize if we weren't able to get to your particular or specific question. I tried to bring them into groups so that, if we didn't get to your question, at least you'd have a little bit of touch on what you were talking. Anne Marie, I would like if you have any other last questions or thought thing before we go. You've been, just kind of hanging around, quiet, listening, and I'm just wondering what else you have to say, or if you have any thoughts.
You know what? I just love listening to Dr. Brett because he brings things to the root of the problem. He doesn't dance around anything. He just goes and comes right in. So it's been my joy to listen. And that last piece that you said about focusing on that positive, you end up feeding that dog. He's going to grow bigger than the other one, right? And so, no, I've loved every minute of it. I always soak your stuff in. I'm a voracious reader of your blog and your other posts. And I'm just so happy I got to spend the time with you. And you too, John. But I get you more than I get in. So there you go.
Well, we are
both of you.
Well, we really appreciate you, Dr. Steenbarger, for coming and hanging out with us again. We always look forward to this. We look forward to the next time that we have you with us. And any last comments, any encouragements you can give us before the end of the session?
Anne Marie, you go first, and then I'll respond.
The great thing about this is it's recorded, so go back and listen. And Dr. Brett dropped some really clear nuggets of stop, listen to yourself, watch what you're doing, learn to have a repeatable process. So many things he talked about over and over again. And when we listen to things the first time, we're engaged, it's interesting. But the teacher appears when the student is ready, and that's very often after the third and fourth and fifth time. So watch this again. He brought I got a whole page of notes, so I'm going to be watching it again too.
Well, thank you very much, Anne Marie. And I want to focus on something you just mentioned, reviewing, and just even one takeaway that speaks to you. In what's been discussed. The research in psychology tells us that we learn to change, we change most effectively if we have a limited number of goals and work on those intensively. So don't try to change everything all at once. Take one thing at a time and work on it every single day. And so whenever you have a coaching session, whenever you have a class, whenever you have something like we're doing here today, one takeaway that you're going to work on, it's going to make you better. You do that each week. And my goodness, the compounding value of that is going to make you better by the end of the year.
100%.
Thank you very much, Doctor. I think some of us call that suck a little bit less tomorrow.
That's right. I love it.
All right. Well, thank you both very much. Got your books here. I've read them both. Got to read them again. What a great session. Thank you again, Doctor, for being here. Anne-Marie, always a pleasure.
Greetings, traders. This is Coach Robert with another episode of TopStep X in 5 minutes or less. In this video, we will provide an overview of the journaling feature. You can access the journaling feature in 2 different ways. First, through the performance stats. Here's the performance stats screen, and this is the date range we are looking at. You can see we've placed a few trades, which we went through in another video. If you scroll down to the calendar, you can see the exact date and trades and P&L that the trades were placed on. By clicking on any of these, let's choose the 18th since there is no note on there to begin with. We have a journal entry that will apply to that particular day. So by adding a journal, we can say, let's see, this is the 18th trade. And then we hit Save Journal, and it applies to that specific day. You can also scroll down and go to the exact trade. Now, although this day is showing it's on the 18th, the trade itself happened to be on the 17th, which was the evening before, but it counts on the 18th per the futures schedule. We can add a journal note to this specific trade. And here's the trade journal, and it shows the trade that we are entering the note on. So let's save this for the other screen. Now when I go back to my calendar, we will now see that there is a note on that particular day. We can also add a note on days we did not trade. For example, today is the 23rd, but what if I wanted to put a journal note on the 24th? And this could simply be a reminder. News at 8:00 a.m. For example, save the journal. We can see that it's saved. And now it will show that we have a note on this day where we can just click on it and bring us right back as a reminder. It's a pretty cool feature. We can also delete the journal if we do not want it, and it will remove it from the calendar. Now, while we are looking at our charts, we have the ability to place a journal entry right in the trades component as we see here. If you don't have the trades component, you can just click on the plus on any one of these modules, choose trades, and then drag it down to the area that you are interested in saving it. We have it here for trades, and we can see each individual trade listed out through the days that we have selected, and we can see the ability to read or enter new journal entries. So let's choose this trade, click on the journal entry, and you can see it brings us right back to the screen we were on prior. So this is a specific trade entry, for example. Then we save our journal. You can see here, and once we close, we now have an indication that there is a journal entry on that particular trade on that particular day. It's a very useful tool, and we certainly encourage journaling your trades in your trading so you can look back and put a plan together and make adjustments as necessary. Well, this will conclude the overview of the TopStep X journaling feature.
TopstepTV, let's go.